सर हो रही है स्क्रीन शो मेरी? नहीं था, मैंने आपको बता दिया था प्रियंका। सब बना दिया वो, मैंने रिव्यू कर दिया, थोड़ा सा गलत था वो। Good
Good
afternoon,
afternoon,
ladies
ladies
and
and
gentlemen.
gentlemen.
Welcome to
Welcome to
25th
25th
Inflection,
Inflection,
BFSI
BFSI
Tech
Tech
Innovation
Innovation
Web
Web
Conference and
Conference and
Awards
Awards
2020.
2020.
I am
I am
Namrata
Namrata
from
from
Team
Team
Audio
Audio
Global.
Global.
I will
I
be
will
the
be the
host
host
for.
for the day and will navigate you through interesting lead talks and panel discussions. Inflection is a series of web conferences and awards and physical conferences across Delhi, Mumbai, and Bangalore. Today, we are here to gain insights and celebrate success and innovation in BFSI Tech. The top leaders of the country will share their thoughts in the keynote and panel discussions. The conference theme is BFSI for the Future Vision 2022 and beyond. Today, more than 400 plus attendees have registered to gain insights from top leaders. Now, let's start the conference with interesting lead talk by Nitendra Rajput from Mastercard on the impact of AI on BFSI value chain.
Thank you so much, Namrata, and welcome everyone once again. I'm excited to be talking for the next, 10 to 15 minutes on what Namrata mentioned about the impact of AI on the BFSI sector. And as I do that, I would also want to make it, let's see how do we do that, but in some sense, I would want to make it a bit interactive because I would want at least your participation, even if I cannot see you, but I would want you to think along the lines which I am thinking, because the first slide that I want to talk itself is on trying to see what we observe in our brains out here. So I'm showing an image out here on the screen. It'll be interesting. Of course, there's no way for you to communicate to me, but why don't you think about what you see in this white box out here? Take some time, look at it. Now, once you've done that, once you have had those thoughts, keep that aside. And I would want then to you to continue looking at the screen and now tell me what is it. I'm sure most of you would have been able to recognize now that it is a dog. And I hope that some of you earlier were not able to identify that it is a dog. So and actually, some of you would have been able to identify the breed of the dog, that it's a Dalmatian dog. And had it been your dog, based on the gait, the way it has been walking, you would have been actually able to identify that this is your dog versus someone else's dog, and so on. Interestingly, there are only very few dots shown out here, which means our brain is capable of making things and being able to understand what it is and so on based on very little data. If you think of these black spots as data points and this whole dog moving as one complete, perhaps, person or whatever is your interest in. So, in order to understand that entity, all you need is very few specific points, and then based on that, you are actually able to identify who it is, and so on and so forth, right? Now, why am I talking is in the BFSI sector? Because this is what you would all be able to associate with, because you have hopefully some background in BFSI. In BFSI, if we look at any kind of data that exists on which AI or machine learning sits on, all that data is definitely not complete. No one party has full information about that particular data. As an example, we can look at the KYC documents which people fill in. Now, a customer writes information in that KYC document, but are we sure that we know everything about the customer? I mean, the document only has a few points. We can only know about those, not the entire history of a human being, and so on and so forth. More importantly, some of those data points could not be completely correct as well, right? So the KYC document is in some sense not fully complete. Similarly, if we look at transactions, so if you are in a banking sector and if you have a customer who is transacting using your bank account and maybe your credit card and so on, but maybe so you will have some information about what this user is doing using your side of the things. but that customer would actually be doing many other transactions, perhaps in cash, some other transactions in a credit card of not of this bank. So you would again miss out on a lot of information that the user is doing, even in transactions, irrespective of which entity you are, right? So missing data exists in transactions as well. How about past experiences? Now, if you have a customer in your system for the last, let's say, 4 years, well, you have a good history of the past 4 years, but do you have history beyond the past 4 years? Maybe what happened in his schooling, maybe what kind of educational loans that person has taken, and so on and so forth. Perhaps not. I mean, we don't track people from their birth in some sense, right? So even if you look at the past history, no matter how loyal your customer is, we don't have the entire history of a customer. Again, missing data, right? External information. So at times we try to collate information that is outside from third party sources, or maybe the fact that what in general we get to know about society, and based on that we try to identify that let's give loan at specific rates to preferential rates to, let's say, chartered accountants, preferential rates to doctors, and so on. Now this information, this decision is relied upon the fact that maybe these domains are considered more stable and therefore there's a good paying capacity, and so on and so forth. But do we know all that external information? Perhaps not. Maybe there are other kind of jobs which are more stable, and with changing time some other jobs that we earlier used to think are stable may not be stable, and so on, right? So the external information is also limited, and therefore we can say that part of it is in some sense missing. Now let us connect these two things. Our brain, with very little amount of data, is able to say that this is a dog, this is a Dalmatian, this is my dog versus someone else's dog, and so on. AI is trying to replicate that kind of a brain which works and which can make decisions on small amounts of data. So in BFSI, where there is a lack of data in any of these things that we talk about, if we can apply to these kind of situations, we can actually get a clearer picture about our own customer, the way our brain was able to get a clearer picture of that particular entity. What if we actually do that? So let us see what we can do if we had full information. So if I had full information, I can actually do a better job of profiling a customer. If we had full information about the KYC, let us say, right? So we can identify what are the right products for this customer. We can identify the best personalizations for that particular customer. We can identify what differential pricing should be used, and so on and so forth, whether this customer will stay or be delinquent, and so on and so forth, right? The whole area around portfolio management, we'll be able to better understand whether a person is risk averse or not, and so on and so forth, what has been his past history from the perspective of taking risks, and therefore we can do a better job of portfolio management. What about customer lifecycle creation? If we actually know, as I said, about the entire history of a customer in terms of past experiences, we can actually create a customer life cycle, because we can learn people who had similar experience right from, let's say, childhood to education to college to jobs and currently with a family. They react in certain way. Similarly, now if I had that data, I can actually build algorithms which will be able to identify how new things can actually take up in that particular space, right? So with addition of AI, all this missing data can actually help us identify such cases in some sense, right? And very importantly, in this area that we are talking about, in the whole digital ecosystem, there are different ways and chances of a large number of frauds and so on in the digital ecosystem. And therefore, we apply large number of checks. Some of them are through biometrics, some of them are through OTPs, and so on and so forth. But everyone is actually different. As an example, I may not be such tech savvy, so I would just hand over my phone to some person and then ask them to type things. For a person like me who is not so tech savvy, perhaps the biometrics or some other kind of checks need to be stronger as opposed to someone who is more tech savvy. So if we can personalize our security and privacy, then that will make sure that the user experience is also good. Plus, we are securing the privacy and security of our customers as well. All of this just with the fact that we will be able to handle missing information. And that is in some sense a strong value add that AI can provide, as you yourself proved, how we can identify a dog from those small points. So those, I think, are the big opportunity spaces for us in AI. And let's go back to the brain once again for the next 3 minutes, and let's see what is
Illusion that
being
gets
shown
us
out here on the
questioning
screen.
our reality.
So what is happening is that this person is actually moving from a door, and then the lady sees that the person is actually just vanishing after he gets inside the door. Of course, there are some things he moves inside and so on and so forth. But where I'm coming again is that we automatically are used to identifying patterns. We have always seen that people who enter the door always come out of the door. That is our pattern throughout our life that we have seen. And if something that does not follow that pattern, we kind of feel uncomfortable with respect to that. Again, copy the same scenario in the AI world. So if we can identify and if we can replicate a brain that can identify such anomalies, which means standard patterns not being followed, then we can actually look at lot of things which exists in which are important in the banking domain, things which do not follow a particular pattern. So things around fraud detection, does this sequence of transaction does not follow a particular pattern, anti-money laundering, and so on and so forth. All of these things without AI are based on rules. Rules are the ones that we all are, in some sense, know. But things that we don't know are the ones that can be identified exactly the way you could identify that something is wrong because a person is not going from the door. Similarly, all these things can be identified from the whole area of anomaly detection within the BFSI sector. So to keep it short, this is all I wanted to cover, that there are a lot of opportunities if we look at how our brain works, how AI is trying to replicate that brain, what are its implications in the BFSI sector, and that in some sense is perhaps what excites me the most. I'm sure there are no ways to take questions, but Namrata, this is all I wanted to cover in this short 15-minute talk here.
There is a question, Nitendra. The question is from Rashmi Ved,
Mhm.
and she's asking, what is the future of AI in BFSI?
Yeah, as I said, I think that's what I covered in some sense. All the things that you now see on the screen on the left hand side, that we can do a better job of customer profiling, portfolio management, user experience and security, balance the two, creating customer life cycles, making identifying anomalies in the BFSI sector, whether it is in fraud or AML and so on, those kind of areas. So all of those are in some sense opportunity areas for AI in the BFSI sector.
There is one more question from Vijay Sharma, and he's asking, what can go wrong in AI in BFSI?
Yeah, okay, that's a very interesting question. So what happens, I think, is that in the BFSI sector, there is a lot of issue related to governance, and because the sector is completely controlled and so on, and also it is also very we are making big decisions who to give loan to, who not to give loan to, and so on. And if you rely on algorithms to do that, you have to really make sure that the algorithms are, because their algorithms are only learning based on past data. If the data is corrupt, then they learn incorrect things. So things around ethics in AI, governance in AI are some fundamental pieces. If they are done well, only then can AI actually be more correct in some sense for the BFSI sector.
Yeah, thank you, Nitendra. These were two questions.
Perfect. So I guess we are done for this part, right?
Yeah, Nitendra. Thank you, Nitendra, for your wonderful thoughts.
Over to you, Namrata, for the next session, or should I continue?
No, I will just introduce all the panelists over there.
So, Namrata, are you there? Should we move on to the panel then? Or Sandeep, would you be able to help with that?
Yeah, Namrata is there. Yeah.
Thank you, Nitendra, for your wonderful thoughts. Am I audible?
Yeah, Namrata.
Okay. Now we
All
have
right,
more
so let's get going with the panel, I believe. And this panel is going to be conducted with the help of some wonderful panelists that we have here. So I see Rohit Dhawan is here. Rohit is the CIO from the Bank of Kigali. Welcome, Rohit. And we also
Thank
have
you.
Subramanian Srinivasan. Subramanian is a vice president at Deutsche Bank. And we are also expecting a couple of other panelists. I see some slide here. So we are expecting Prasanna, who is the head of digital at the CB Bank, and Jitendra Mahapatra from the Axis Bank. Wonderful. So a couple of panelists have not joined yet. Namrata, would you want
You can start the
us to
discussion,
wait, or
Nitendra.
Sandeep, would you want us to wait, or can we
Yeah,
start?
no, you should start the discussion. We have a message there joining. And
Just
Nitin,
give
you
us
can
a
start the
second
call.
while we kind of organize ourselves.
Hi, Nitin, you can start the call.
Hey Nitendra, can you hear us? Rohit, can you?
I can.
Okay, let's break the ice then. Let us do one thing. We can introduce ourselves by the time Nitendra gets his mic back. So let me talk about myself. This is Subramanian here, and pretty privileged to be in this panel as well as in this discussion as such. And thanks to the wonderful audience for turning up to listen to us. With respect to what I do, Nitendra already mentioned that I work for Deutsche Bank. So I've been here
It's
for
been a
around.
while that we've been doing these online conferences, but I guess every time there is some or the other challenge. So please give us a minute, everyone.
Uh,
Yeah, sorry. I think there was some technical glitch at Namrata's end. We have got very interesting panel, and the panel topic is digital banking transformation. Are you ready to use the best of disruptive technology? And very, very esteemed panelists are there on this panel. One of the best in the industry who are moving the BFSI industry towards its growth and heights. We have the moderator, Mr. Nitendra Rajput, who is VP and head of Mastercard. And we have got Subramanian Srinivasan. You can see him on the video. He's the vice president of Deutsche Bank. We will have Jitendra Mahapatra. He's the vice DVP and head savings of Axis Bank. And we will have Prasanna Lohar, head digital banking, DCB Bank, and Rohit Dhawan, chief information officer, Bank of Kigali. So I will request the panelists to start the discussion. There's some leaders are joining shortly. We have already got the message, so we should not wait for them.
yeah, I hope somebody can hear me out there. Can you, Sandeep?
Yeah, loud and clear.
Okay, so I was just introducing myself. So as Nitendra mentioned, I work for Deutsche Bank. I've been here for 5 years. And what I do at Deutsche Bank is this, right? So as all of you know, IT is pretty pervasive and we have a lot of departments doing the same thing. And there is a need for rationalization. So what I do at Deutsche Bank is I run the data and analytics platforms. Because if you look at it, the way IT has grown traditionally has been in a siloed way in banks. Every department has been trying to set up their own data department, analytics department, BI department. So what we do out here in Deutsche Bank is that we have taken the least common denominator out of all of these, and we run those as a platform. So we've got platforms for microservices, we've got platforms for data and analytics, of which I'm a part of, we've got platforms for developer tooling, etc. So in data and analytics, what I manage is main thing is the big data part. So as I said, typically banks have set up their own Hadoop clusters, and they have been set up either on the basis of geography or on the basis of business line. And the end result is that every bank has around 60 to 70 sets of clusters. So 70 into 5, if you look at an SDLC, Dev, UAT, Prod, DR, we got around 300 odd clusters for every bank, and that's pretty difficult to manage, right? Because we got maintenance, we got upgrades, and we got a lot of RTB to do. So what we have done is we've taken all of that together and we run that as platforms. Similarly, business intelligence, right? That's also an area where every bank has tried to set up its own stack per department. So we've got Tableau, we've got business objects. So all of these things, we try to get all of these together and we try to run that for the bank. So that's what I do in Deutsche Bank. Currently, it's all on-prem. And as you would have read the news, we have tied up with Google. It's one of a kind partnership with Google. And we are trying to get onto the Google Cloud. And a lot of what we discuss will be around those lines. Rohit, if you are there, maybe you can give your introduction.
Thank you, Subramanian. I'm Rohit Dhawan. I'm the CIO for the Bank of Kigali. And I'm going to take certain input points, what Subramaniam said. We have a very different approach. Instead of creating siloed approach for every department, what we've done is we've created a baseline during our digital transformation, and we've put data analytics as a vertical which cuts across every department. So instead of every department creating its own data set and then trying to run its own analytics, what we've done is we've created an environment which is akin to a cloud hosting environment within ourselves, where anybody and everybody within the organization who needs certain tooling and to start any analytics, they're able to tenant themselves on this particular platform and then start what they want to do. One of the elements that we are exploring as a bank is how do we use the latest and the innovative technologies and not try to get into the trap of the huge licensing fees and the old school technologies like Oracle, Microsoft SQL, and get stuck there. Because what we've observed is all the modern newer technologies which are on cloud utilize the current tech and the modern technologies, and they let go of the past and the legacy, and that makes them very, very performant. So we've taken an approach where we are disrupting the core banking space as well, by utilizing the latest in technology that is available, with the capability to run right now on premise and then move to cloud as and when we choose. Thank you. That's our digital transformation journey that's happening right now.
Thank you so much, Rohit, and welcome, Prasanna. We're glad to have you here. Before I begin with a set of questions for you all, it will be good for you also, Prasanna, to introduce yourself to all the panelists and the audience. I think you are on mute, Prasanna.
Yeah, Nitendra, right? So thank you so much for the thoughts and what's going on in our digital transformation journey to express these things. So I'm Prasanna from DCB Bank. So I take care of 3 divisions at bank, so which is around digital delivery. Secondly, which innovation across all the units, and technical architecture of the bank. So during the course of this discussion, would like to see how can I really participate in the discussion and give out all my experience and thought process, which can be helpful for audiences.
Wonderful, wonderful. Welcome once again. All right, so let us start this panel discussion by what is on top of the head for everyone, which is the pandemic, right? But from a BFSI perspective, I wanted to understand, and usually what is said is that every intention is a trigger for transformation. So to any of the esteemed panelists, I just wanted to ask if you would want to take this question, which is, I mean, transformation generally at times needs a trigger. And if you can think that this pandemic is a trigger, then can banks use COVID-19 as a trigger to unlock the potential of open finance?
So let me take the first shot at it. Open finance is a dream because in the restricted economy controlled by the regulator and very heavy-handed control, it's usually a hand-me-down approach by the regulator that you have to open your data sets and you have to organize yourself and share data between the banks. What this needs is an anti-competitive approach, and that's usually positioned by the regulator so that the bigger banks don't swallow the smaller banks, just because their data is available. That's one approach. The second approach is what Europe is doing with its open banking space. That is critical because though it's driven by policy, but now the banks have taken the initiative, realizing that they cannot keep those iron walls very high. They also have to open themselves up to the fintechs who are doing some good critical work in which space the banks cannot go in. So it has to be initiated by the regulator, specifically if we talk about the geographical region of India. The regulator has to start the initiative, and then from there the banks can take the lead. And if it works in the positive direction, then it becomes an initiative that just bears its own fruit.
Interesting point that you bring in the regulated aspect of it. Subramanian or Prasanna, do you have any thoughts? Especially, I would want to hear if there is a way to actually also influence the regulator so that they can pick this up faster. If that's also something that you see banks can play a role in.
Yeah. Uh, Thanks, Nitendra. So Rohit covered the basic aspects, which is about what is this about? It's ultimately about data sharing between banks. Because if you look at any bank, the data that they have collected, say in our case over the period of the last 150 years, that is the main differentiator from any other bank. And if that data is shared, will it retain the competitive advantage? Is the question that every bank is asking itself. But that question is not asked to themselves by the challenger banks, because they practically don't have any data with them. What they have is the expertise and technology. So as Rohit mentioned, it's the main origination is from Europe and UK and Germany, which is called the open banking capital. That is where the revolutions are happening. And if you know Halifax and Revolut, these are some of the banks which are leading the challenger banks, as I mentioned. So the whole challenge is with respect to standardization. Now, let me give a slightly different perspective of it from the point of view of API banking. And it's also a bit related to what we are doing at Deutsche Bank. So if you look at what banks have been doing traditionally, they have been their own software shops. Every bank, every department is running its own software cottage industry. But now the view is slightly different. The thought is, can we, using our brand capital, be more of a API integrator? Because we still have a brand capital, and every bank, every large bank has that as the main weapon to play with. So the question is, can we play the role of API integrator? And we have payroll specialists, we got billing specialists, invoicing specialists, and each of these are SaaS providers. So can we take the initiative of tying these up? Right, that is one question that we are asking, and we are on that journey. And with this also, there is a regional flavor, because every region, every country has their own SaaS specialists, right? So can we give a different experience to the customers in every region based on the SaaS providers who are dominant in that region? So that is one thought. That is still okay in the area of consumer banking, but it doesn't totally cut it when it comes to corporate banking. So there the thought is, can we have a partnership stitched together between the fintechs, wherein this kind of a bank within a bank concept can be realized? But as I said, that is the future. We're still not there, we're still thinking about it. But if you ask what is happening in banks at the moment, it is about for leave aside tying up different SaaS providers, can we tie up different applications within the bank? the answer is partly yes, partly no at this point, and that's where the focus is. And AWS, Amazon has led the charge in terms of APIfication. Any two application, any two systems in Amazon have to talk via APIs, and that's what we are also doing. We are also doing the same thing. It's easy in some areas which are compute heavy. It's tough in some areas like the area that I am dealing with, which is more of big data, which is more data heavy. But we are still trying to bridge those gaps. And also there is this question of can we have a good orchestration mechanism on the data front within the bank? So those are some of the problems that we are trying to solve. I don't think in our case, COVID has been a driver for that, but for sure, COVID has been an accelerator on a lot of innovation strategies, and this being one. What do you, Nitendra?
Thank you, Subramanian. That's an interesting point about how COVID is making an accelerator on your same path. Prasanna, would you have anything to add here?
Can you elaborate your question, Nitendra?
Yeah, I was just wondering that in this space of COVID and the pandemic, is there anything that can be helped to unlock the potential of open finance, especially during these times?
I think COVID has the news has come in a month of at least in India, February, March, right? And that's how we have started their journey. I think to be on open finance and open banking, it's a journey not for one bank. It should be journey for a complete ecosystem. Ecosystem has to come together and really work together. So I think say example like in European Union, right? We have PSD2. It doesn't took 8 months or 9 months to implement that. It took at least 2 to 3 cycles of PSD1, 2, and moreover. The regulatory guidelines, right, or a support from regulator was much more required there to really implement the PSD2. Now let's take example of India. We are really not there as long as only account aggregation is a concern. They are now trying to build that kind of a standardization around opening those APIs from a bank. So where only 7 to 8 banks are really doing that exercise since last more than a year. And if we talk about account aggregator, I'm hearing since last more than 2 years. It's coming, and so pandemic and I think COVID may not help. Why? Because it's a detailed exercise for a complete ecosystem. Now, what COVID or what pandemic impact was there? It was on a human augmentation. Since I would say the customer who was coming to your branches, he has started expecting everything from home. Right, customer who was visiting ATM and putting those cards, he is now not comfortable to put card and put those pins. So he just want everything contactless, right? And even if you say the UPI transactions in the month of July, August, September, it was multifold. Like compared to last year, it was 10 times more than the last year, right? So there are multiple factors to bring on open finance, but I think what COVID has brought in, the customer behavior has changed. Customer need wherever he is, like he's in home or he's traveling or he wants all types of services under one roof, or wherever he's on, typically on mobile phone, say example. So that has given one trigger for open banking, I would say. But to become a matured open banking ecosystem for a country, it is not a exercise by one bank or one Paytm or one Geo. It has to be everywhere, and it has to be aligned with the regulator. There are banks like ICICI, DCB, or Federal, or Yes Bank, or SDFC. If I name, hardly 15 banks in India has taken advantage of open banking or open banking so far, right? But I think with the account aggregator, I can see that there will be a lot standardization around data utilization and the API utilization, and that will trigger for the open finance in a future. What more we can look at, Nitendra, like how these fintech companies are going to consume these APIs, how innovatively they can bring more and more finance to the last mile. Today, we talk about API open banking, typically it is around 30% of a customer in India. It is not for those 70% who are walking down towards branch and doing those transactions still, or walking down towards a business correspondent and doing the transaction on cash transactions, or some of the utility bill transactions. So we need to reach there. So when we'll be in era of 5G, right? Maybe down the line 2 years, or wearables, or IoT, that human augmentation will be some different kind of exercise for us. So bank needs to be ready for that 5G or adoption of the IoT or APIs here onwards. So I think in a nutshell, COVID has given a trigger for a behavior of customer change or expectation. And say example, today I'm a customer of going to the movies to movie theater physically, that particular physical cinema hall. But today I am much comfortable on Netflix or Hotstar or that kind of channels. So take my personal example, I will not see ki next 1 year I'll go to the cinema halls. So anything relevant to customer, let's look at how same customer who is having that cross industry behavior, right? So how he's performing into non-finance industry. So he's not willing to go cinema halls. He's not willing to go to those bazaars and markets to buy vegetables, and he's able to do everything on phone. So similar exercise, similar experiment he wanted from my bank also. And bank should interview such customers, interview and ask them, is it what really required? Let me build something for you. They do it or don't do it, but there are fintechs who are now doing and bringing that much more experience. I think adoption of a phone pay and Google Pay. I must have interviewed many hawkers during this pandemic. What do you use? I use Google Pay. I use phone pay. Do you use SBI? Do you use ICSA? No, this is much comfortable. So I think that's another wave, and that wave has really created open banking typically only for payment.
That's
But
very
open banking is not only for payment, but opening account. How do we provide all kind of services, or how do we engage my customer throughout my banking journey or non-banking journey? I think that open finance is yet to come, but COVID has given that trigger. And typically, if you talk about DCB bank also, we are now doing a lot of innovations on that trigger. How do I connect fintech within 2 days? Or
wonderful.
within 3 days without much of this? Usually it takes 15-20 days, right? So we have seen that era where POS adoption, right, point of sale, it is to take days together to implement, right? So now it is a half a day of exercise to if you want to put a POS at a merchant location.
I think
We
what you
look at our
linguistically,
open banking journey.
yeah, I was just saying that you very brought up a very interesting point that maybe because of the pandemic, the customer behavior is actually changing, which is very interesting.
Actually, that
Maybe
has
we could
changed,
tap
and we
on
need
that.
to
Yeah.
adapt that. If we don't change as a bank to meet that customer, changing customer, I think there is another wave.
Very
Geo, Google, they will take care of those customers. Yeah.
just to add to that, I mean, maybe this is a good point for us to discuss, but I think just to wrap up on the previous question, it was good insight to understand from all three of you very different perspectives. One is on the customer side of things, the behavior changing. The other is the ecosystem, talking about the ecosystem. You need to have multiple players. You need to have the regulators doing that push, which is when this whole open banking ecosystem can actually prevail and move to the next direction. I want to now actually talk more and some of the things that Prasanna you mentioned, talking about technologies and so on. And let me shake it up a bit by using this quote, which says that disruptive innovation can hurt if you are not the one who's doing the disruption. Now, if in general also, I mean, transformations comes with some disruptive technology rather than incremental technologies usually, right? So I wanted to get to know from any one of you, and maybe Rohit, if you would want to start, I wanted to ask, are we leveraging any disruptive technologies to shape the digital future of banking?
The good answer is yes, we are. All the banks are. So let's take this in multiple pieces. Subramaniam touched on the big data clusters that are being used. They are no more a taboo or do not require a very heavy skill set to implement. So the banks are exploring that technology. But the fundamental problem that the banks are facing today is the data store technologies. Let me talk about us, what we've done. Normally, when you want to buy a new core banking system or an upgrade to your core banking system, you've got three big players who are the only service provider for data stores, which means databases. So, what choices do you have in the market apart from negotiating with one of them and arriving at a solution that says, okay, you are going to either use IBM, Oracle, or Microsoft? Do you have a fourth choice? Maybe, maybe not. But over the last 5 to 7 years, we've observed that because of the advancement in technology and the disruption caused by the cloud service providers, the critical asset transaction posting and OLTP databases They have moved away from the grasp of these big players, and they're going to the smaller and niche players, which have which don't have the legacy baggage or the predatory pricing that they have, which allows smaller banks, larger banks to explore products, technologies, and start going ahead and innovating in a very different manner. And we are one such bank in the region in Africa. I know we are talking in the context of the world here. So what we've done is we've chosen a incumbent who's challenging everybody in transaction processing space, and they currently hold the world record for TPS. And that was a surprise for us, that when we were doing our research on what technology we want to go for, we found that they were better than even the older players. It's just that because their technology was not adopted widely, we were a bit skeptical. But then, that's an engineering question. Would your engineers be able to manage it? Would your managers be able to handle the low workload? Would your systems be able to grow when you need them? uh, so you are able to do that with those disruptive technologies. And let me give you an example. Today, if you run out of capacity on your Oracle cluster, the only choice you have is to shut it down, add more hardware, or buy more licenses. There is no other choice. But on cloud, have you ever observed that today on cloud they say, okay, if you need more capacity, just allow it to be elastic, so that it grows in capacity and comes down in capacity based on the load. That kind of innovation is what we were always targeting when we were looking at it. So when your core data store has the capacity to grow based on your demand, what you do is you free up the resources which are the layers above that, which means the applications, the APIs, the analytics, everything is freed up now. They can all be flexible and they can demand resources at a point in time. And it makes the whole bank independent in such a manner and flexible in such a manner that uh, you are so well organized, and you're managing your load better, and you're able to innovate faster, because one product, when it's innovated and built, may cause performance impact on the core banking system, which is not an ideal situation. So I just touched based on that. Now let me take you to the other aspect, which is the innovations on the API level. Traditionally, everybody uses SOAP in banking space because you want to secure point-to-point connections, heavy securitization. The other aspect is when we started looking at how the fintechs and Googles and Facebooks were exposing their APIs using OAuth, or securitization using standard technologies or open source technologies, that allowed the banks to even explore shaping out and giving out their APIs for consumption by fintechs using these modern technologies. The challenge came from the core systems not being able to expose the data directly. So there was a technology always available, which was mostly used in telecom space, but now has moved mainstream into banking as well. Which is called the enterprise bus. So it allows you to connect the legacy systems with the modern systems without the need of changing the whole ecosystem just to make APIs available. So these are the modern disruptive technologies, three of them, which the banks have started adopting to their benefit. And it's a journey. What will happen is the banks will become flexible, faster, innovative. At the end, the idea is we should not fall prey to the old mindset. Listen, this is a tried and tested technology, not challenging the vendor to innovate. For example, an enterprise service bus vendor should not say, oh, I only use Oracle, so if you want to buy my product, buy Oracle. So that limits you again. So you should look at options. You should look at a vendor. You should look at a product which gives you the flexibility based on your appetite, not on the appetite of the vendor. Thank you.
Thank you, Rohit. These are really encouraging examples that you gave of how disruptive technology is being adopted within banking sector. I'm sure Prasanna and Subramanian, you would also have some similar examples, right? So maybe we can go to you next, Subramanian.
Yeah, sure. Thanks, Nitendra. So the question is about disruptive technologies, shaping the future of banking. And I can go on and on. So please cut me off if I'm, running over, because there are a lot of examples to give. Let me first start talking about the predators that Rohit mentioned, and he's pretty right. say there have been 2-3 dominant players in the database space, and I think all of you would have seen the some videos earlier when Amazon had a target that they wanted to shut down all the Oracle databases they had, and when they shut down the last database, they had rings, the bells ringing, and they had celebrations. So that is the way the predators are being looked at, thanks to all of the developments happening in the disruptive space, right? So now coming back to disruptive and banking, I feel that it's a bit difficult to use the words disruptive and banking in the same sentence, because we typically see that disruptive technologies are pioneered in the low risk sectors, and once the technology has matured, it has evolved, it then lands in the banking arena, because we don't want all of our hard-earned money to be used for some lab experiment which then goes up in smoke. But having said that, banks are also pioneering a lot of disruptive technologies, but looking at the risk benefit ratio, because if say there are HR systems, there are payroll systems, it's easier to take risks on those, as long as you have enough hardening around that, and then go to the high risk ones like a treasury or a market risk kind of a scenario. So that is one point. Uh, the other thing, let me again switch back to data and analytics, right? Let me give an example. Data scientist, and Nitendra, you know very well, you are a pretty accomplished data scientist. Data scientists traditionally have been they are the ones who come from a background of statistics, mathematics, and they generally are pretty far away from the IT world. But if you look at the state of the estate now, there is a lot of data. I mean, the more the data, the better the analysis. That's a common phrase. And there is a lot of iteration required before you arrive at the best model. So that's where data science and big data, distributed computing are getting married off, right? Because earlier data scientists just used to write their stuff in a Python program, keep running their iterations, and the time to market was not that big a factor. But now with the competition around, how fast can you have a refined model with what score is the question. So I can see my data scientists very well aware of Spark. They are contributing to the technology communities with Spark or Drill, etc. So that is one evolution that is happening in that space. The other I've seen is data science, leaving the jazzy part aside, which is only 20% of it, right? The esoteric part, the grunt work is still in getting the right data out, and there was a lot of hand coding required for that. But now I see a lot of tools which are there, which visually tell you how your data is stacking up, what is the standard deviation, where are the gaps. It gives you intelligent suggestions with which it can fill the gaps. So those are things I can see they are taking the world of data and analytics by storm. The next part is visualization, because the board members typically are used to get see people getting funding on the basis of some jazzy presentations which don't have any data that is backed behind them. So there is a bit of a resistance in that sense, in terms of how real is this presentation. So what I've seen is Jupyter notebooks which combine the world of Python as well as visualization. I can see they getting used in board presentations, and there is a bit of authenticity to that, if I can say, right? Because this is based on better data than what was used before, right? And Nitendra, one point you mentioned was about anti-financial crime and doing all the analysis. So just to lead on to that point, right? Uh, what do I need to make a call whether a transaction is fraudulent or not? Just data from one system won't do. I need the transaction data, I need the retail data, I need the RDS, the reference data, I need the latest customer profiles. I need all of those joined up before I can give my analysis. So what's happening is the concept of a data lake is coming into vogue. It's been there for the last 3-4 years. Data lake has become a data mesh and all that. But the point is that, can I get the view of all my data in one place with a beautiful data catalog that tells me what data is what? And can I make a decision based on that? So that is something that we are using in all our applications, and starting from anti-financial crime, as you mentioned, Nitendra. And the last part is big data. Generally, the thought when you talk about big data, the next word that comes in line is analytics. So, okay, how is the sentiment analysis? How many likes do I have for my post? But what we realized in 2015 was that a practical example. We were getting penalized by a few regulators because our sub ledger reporting wasn't going on time in one of the Southeast Asian countries. So we had to pay penalties for a long time, or we had to change the game. And what we did there is we moved to Hadoop as early as in 2015. So what was taking 5 hours earlier went to around 30 minutes based on the compute capacity that we fed. So that was one area where we realized that, okay, it's not just about analytics, but we can do transaction processing based on that. So we are doing a risk modeling on that. We are doing a liquidity reporting on treasury based on that. So these are a lot of things that we are doing on the basis of Hadoop on-prem. And as we all know, now the next journey is onto the cloud, which is where we are going. So those are some of the things that I could think of, Nitendra.
That's very inspiring. And I mean, if I hear the things that you all are talking about in terms of elastic compute on the cloud, use of enterprise bus, visualization, and so on and so forth, I mean, yeah, that clearly shows that across the sector, the whole technology is actually just being consumed very quickly in some sense. But I won't stop there. I have another challenging question for you all, and maybe Prasanna, you can take a dig at that. And to even motivate more on that question, I wanted to use this quote, which says, innovation distinguishes between a leader and a follower. And so the question here is that can we follow, or is there an opportunity to lead the way in digital transformation for shaping the future of banking? So I think Subramanian also mentioned in terms of a few banks within Europe who are leading in this particular manner. But would you see any opportunities for us to lead the way, Prasanna?
Yeah, I think there are a lot of opportunities, and I really I'm with you that innovation is really required in Indian context. European banks has their own challenges and their own environments and their own regulations, right? So they may innovate fast, or they, because the set of customers, they have a different set of customers. If you go to Singapore, they have small set of customer and different set of customers, and their regulations also quite different. So I think India being there, we have a complex regulations around multiple regulators in India. There is a regulator in bank. We have regulator like SEBI, and I think different regulators and different demands are there. But for same set of customer, how can we innovate and bring on much more needed services ahead of a time? That could be the one game changer we can do. Say example, account aggregator we are doing, which is again aligned with what somebody else was doing in other countries. Or we talk about a blockchain, we are not there still, right? So compared to China or Estonia or some of the blockchain countries like Australia or Dubai, we yet to reach to that level. You talk about AI, I think we are there, but we are again following what other countries are doing, or we are adopting those practices and we are implementing. I think we are in the mid of something like while your 5G is gonna come, and adoption of wearables and adoption of your smart banking through IoT is gonna come. I think where not much has happened across the world. I think that is an opportunity to be there and create our own standards. Like the IoT, there are not much standards available, right? So and we have our own geospatial map, right? We have to adopt that, right? We have always been adopted Google Maps in our but we have very good map technology which we should adopt, which is being innovated by Indians altogether. You talk about when we'll have our own 5G and wearables and we'll IoTs, right? Or AR VR. So we have a lot of upcoming startups who are working on AR VR. So today it could be mobile is a game changer or a driving factor, all the digital transformation. Tomorrow it could be IoT combination with the AR VR combination with the 5G. I think these kind of innovations we should practice and nurture our startup ecosystem and to be there ahead of what other countries are doing. What's going to happen, if we will not adopt these upcoming startups and upcoming technologies here, so these same startups will start selling or providing this outside of India, which has always happened, right? So I think post pandemic, I think 2020 is like a thin line wherein we should innovate a lot, right? Although yeah, it is always good to see how Israel is doing on security, or many other AI products, or how Singapore is adopting a regulatory sandbox. It's always good to have best practices so that we shorten our timelines. But I think India being full of so many experts in all the areas, starting from digital transformation, we talk about security, we talk about about AI, blockchain. I think we are very good at this initializing thing, and but to have a right governance and right path, I think we struggle a lot, and the journey goes haywire. So I think we have a very good ecosystem like UPI. UPI, it's a landmark ecosystem we have built, and other countries also look at how you guys have implemented UPI. Similarly, Aadhaar, we are front runner in any of the digital identity. So success of any country is gonna be here on how you gonna implement emerging technologies like IoT, drones, or wearables, or blockchain, AI, and so many other technologies. And typically, how utilize the data, how you are going to utilize the data. India is sitting on huge number of data. Still, we had to do a lot of innovations for health or and the similar kind of data other countries are having. They have started utilizing that data locally, or I think at a national level we have a committees on FICCI or MITI on AI, but I think we need to have a right use cases how we can utilize AI or blockchain and any of those for a common Indians, common citizens, right? We talk about cryptocurrency, hardly is going to be utilized, right? But you could talk about one coin like a India coin or a India cryptocurrency, right? Or a Amul at Amul we can say milk coin or a wheat coin. That is going to helpful for streamlining a lot of operations. Utilize blockchain for enhancing supply chain, like we announced in Atmanirbhar. We announced it very well at Atmanirbhar, right? We'll have to enhance the supply chain across India, but how do we do that, right? Solutions are available, but how do we bring on against that use case these solution available for companies, corporate together? I think we can do it provided it comes from top. Demonetization come from top, we have implemented. Aadhaar came from top, we have implemented. UPI came from top, we have implemented, and we are there at a front stage. We should bring how this adoption of a new technologies should come from top. If it is done, like say example, tomorrow I will say we should have a data officer at a India level or a blockchain officer at India level at a meeting. Then
Right.
only I think we'll be able to implement. Otherwise, we'll be always adopting something coming from out, and we'll be happy to say that we have done this.
Very good points. And I think when you mention about Aadhaar and so on, there are unique points that India actually got into, and perhaps that's an opportunity for us to innovate and lead. Rohit, you had some points out there, is it?
I have a certain, a reservation to a few comments which are made, which is about latest technologies, because this is my personal perspective. So whenever there is a new and a fancy technology, people jump onto the bandwagon because it's a Western culture. And what doesn't happen is how do we take on the challenging aspects of sending our products into the rural space? How do you get the banking to the customer who has a 2G phone? Why are we talking about 5G when we've not even touched 2G people? Getting a phone to the customer was the primary objective of the Indian government. Now they have the phone. How are we making the banking services reach them? That's one of the biggest challenges. So financial inclusion is one of the biggest challenges that the country has. And I think the country has tackled that well from an Indian perspective, because there is that the subsidy payment through Aadhaar linked accounts, opening up of the bank accounts. There's some significant improvements which have been made by the policy and the regulator. Now, when we talk about data science and all of these aspects, you can't ask the regulator to expose their data to you. And you can't ask for analysis being given to a private organization. They may collect information from you, but will they disseminate information back to you? From my personal perspective, that's not going to happen anytime near the future. What you will end up doing is you'll end up sending more information to the regulator. The more you generate, the more you have to share with the regulator. One of the challenges every country faces across the world is the competitiveness between each of the organization uh, is based on profitability. Nobody is doing this for free. So if they don't see a product making sense out in the market, They won't launch it. They won't even invest in it. They won't even try to, run analytics on it. They know it will not succeed. So why should we do it? The reason why fintechs are successful today are because they've done their research. They know that this product will be successful, and they are creating a small ecosystem instead of a large pipe, heavy loaded, and they're nimble. They know what to do. They're less risk oriented. That they may have a financial risk on a higher capacity, but they're very far from failure oriented. So fail fast, recover faster.
That's a very interesting
If
point.
you fail, you get punished immediately by the regulator. That's why we're very, very cautious in our approach. And if we start running analytics, and then there is a big brother approach by the government on running analytics, I'm not sure if that the commercial organizations which are built for risk will be able to survive the big brother approach.
That's a very good point. And Subbu, maybe I can come to you with a bunch of things now. In your earlier statement, you did actually mention that perhaps we are not the ones who would want to invest in experiments that even don't lead to any fruition and so on. So rather adopt what already exists. On the other hand, there are these thoughts that Prasanna also had, that there are these new technologies we need to figure out, or maybe the regulators need to provide some space and opportunity for us to use those and so on. And what I guess Rohit is saying is that rather than adopting what already exists in the fancy technologies, perhaps there is a need of the hour, need of the land, which should provide us enough opportunities to innovate, because that is what our focus should be. And I would again want to use this quote to again challenge you, which kind of says that smooth seas don't make a skillful sailor. If that is the case, and if there are these two scenarios that you want to innovate in your own ecosystem, but as you said, you don't want to experiment too much and expose yourself, and also you don't just want to copy because it's a fancy thing. So if those are the situations, then what do you think are the challenges that banks would face when they are looking at digital transformation?
Yeah, sure. And you are right. The rough seas make a skillful sailor, and the more the bank has been there in the waters, I think it becomes a skillful sailor by merely being in the water for that long and not submerging. So yeah. So I think what are the challenges that are faced by banks, especially with running transformational programs? I think the easiest answer that any IT leader will give is budgets. Right, that is the biggest challenge in this day and age, when short-term profitability, short-term investments are the mantra of the day. So budgets are the biggest challenge. But let me elaborate in terms of what I mean by that. Right, there is a big IT transformation project that is kicked off, but uh, there is something that needs to change. But you need to keep your current system running. You have regulatory commitments. You have to make other other fixes to get, just keep it running. You need to have budgets to do both things. That's where we start with. And one, the reason there is a bit of pessimism to giving IT people more budgets, and that's because a lot of promises have not been kept. Whatever have been made so far, things that would have changed the terrain have not been kept. And let me give an example. The biggest challenge that I see when I run a platform is that even systems which were supposed to be decommissioned long back are still running. If not with 100 applications, they're running with 3 applications, and they're not showing any signs of going away. So net I can see some cost saving, but not what was promised initially. And every IT project overruns, and that has already added to the red already. Right, so that is one part. And this adds a lot of technical debt, and that is one reason for the slight pessimism. In terms of I'm not talking about a pure India scenario this time, but in terms of the challenges that I've seen in banks, data is the biggest challenge. Data quality is the challenge. And so far, management has not been, the different management has not been keen to acknowledge that data is important. Data has always been in the back burner, and it's compute and it is the other fancy stuff that has really taken the front benches. But now that is changing. But still, what is the challenge? Every time we embark upon a strategic data program, we ultimately end up with the legacy data, a strategic data, a tactical data, a super strategic data, and all of these need to be stitched together. And that's ultimately adds to your technical debt big time, right? So that is one challenge. Second challenge is the bigger a bank has grown, the more legacy overhead it has to bear. Let me give an example. I was earlier selling treasury products to different banks, and it was just one treasury product that used to do FX, money market, FIS. But the larger the bank and the more inorganically it has grown, even for a very small function, you need to have a system that just does that, and you got to stitch 100 of those applications. So any transformation program has to touch all of these, any regulatory program has to touch all of these, and it becomes a very mammoth project that it doesn't exactly give what it was promised. It stops somewhere midway in terms of the ultimate delivery. So that is one challenge I've seen. The bigger the bank, the more inorganic it has grown, the cost of change is that big, right? The other challenge that I've seen is that when the money purse is flowing, when the money is flowing, every business wants to control its own IT. So you got a business, you got another business, and every business controls its own IT. It gets in its own technologies, its own ways of working. So there is a lot of redundancy in terms of technologies, and it is very difficult to manage all of that as you grow, right? So that is one challenge. And right now when we are moving applications onto the cloud, that's a very big challenge, because what should have been done in one application, there are 4 or 5 such applications that are doing the same thing for different geographies, and nobody has the confidence to say, okay, this one application would do shut down all of that. Nobody can just hold the pen and say just do this, because it becomes a very complex behemoth to manage. uh, I talked about data already. uh, Infrastructure, right? I again talked about agility out here. One is the software agility and other is on hardware. So if you are on premise, you have a brilliant idea, but to execute it, you need hardware, you need infrastructure, and getting any infrastructure takes 6 to 9 months. Getting one box takes 6 to 9 months. And in the meanwhile, the bank and the department have to manage with tactical solutions. And once the box arrives, people are confused. Shall I switch off the tactical, or shall I have both? You know that better, Nitendra. That is one big challenge. Skill, I'll not talk about skill sets, because that is something that is a widely accepted thing. The hotter the domain, the more disruptive the technology, more difficult to find people. In the India context, the challenge has been that you need somebody who's good in GCP data. You find him in Bangalore, you need him in Pune. And somebody else who is good in AWS is in Pune, but you need him in Bangalore. But now with we are all working from home and doing good work, there is a bit of a hire from anywhere that I can see. Hopefully that can be a bit of a leveler, and we can get the better people that we want to get the job done. And I'll not exactly use the word red tapeism, but there is a lot of controls that you need to pass to get any change done in a bank. There's a lot of process controls, compliance. There's also a regulatory angle if there is something that is touching the regulators. So the cost of change is again getting added to. So all of these, right, plus the change in strategy. This is the last part I wanted to talk about. You go with an intention, okay, let me go to the cloud. You say, let me go on the infrastructure as a service front. But later you do a rethink. Do I really need to have that strong an exit strategy? Can I go with a PaaS model, a cloud native model, which will build a stronger application? So once you've gone a bit ahead, changing course becomes that difficult, and you already spent, it's a sunk cost already. So these are some of the things that I can think of, Nitin.
Thank you so much, Subramanian. And Rohit and Prasanna, in the interest of time, I just wanted to get a sense from you while Subramanian talked about budget, talked about data, the appreciation of the need of data, infrastructure, skills, and so on. Is there anything specific, perhaps, that you think which is specific to the banking sector, which makes the change relatively more difficult?
Fear. That's the only element that I feel is the thing. You can't take risks. You are so even you talk to any banker, the risk they are taught is the risk to take with money, not with technology. So that's my biggest concern. That's where we come and play the role of understanding what a banker does, how a banker behaves, and then exposing them to the technology risks and making them understand the technology risk. One of the elements that Subramaniam touched on was how do we get multiple customized applications to play ball together. Well, that's a challenge for everybody because we all grow inorganically in banking space. You launch a product, it just accelerates, and the only thing that you can do is throw more iron at it so that it survives. There's no choice, there's no other mechanism to do it because you can never plan as much. But the context here more is, how do you build capacities, how do you predict better, how do you make your pipeline stronger? This is where the technologists come in space. And every time a new product is being designed, when the conversation is happening properly with the technologists, not in an isolated manner but in a very conversative and collaborative manner, it becomes a more manageable product, other than becoming a disruptive product even internally. I've seen examples where a mobile money wallet was launched, and within the first month they had hit everything on full capacity. They couldn't grow. They didn't have the capacity to grow. They couldn't even go to cloud because they had built it with the capacity for 2 years, and they were over in first month itself. How do you go beyond that space? You're not built to even accelerate that much. So they learned from it very quickly, but the time to market was already killed. The product had lost its primary advantage. The competitors had caught on. So by the time they finished everything and created that whole elastic environment in next 6 months, their product was a laggard. So the point here was, when they were planning, they had not planned for an accelerated growth. So that's where now every conversation that is happening in every bank today is, if we launch a particular product, what is our strategy for accelerated growth? What happens if the accelerated growth does not come? And if our systems fail, what would be the perspective of the regulator? Because regulator today has, I would say, a non-compromising perspective towards technology. They say, when you were planning a product, you were planning to sell it to 1 million people, why did you put in a capacity only for 1 million? Why not 2 million? Why not 5 million? So look at it. And I'm quoting something from the RBI law, which states that your core banking environment needs to have at least 80% capacity free any given point in time. I'm yet to come across a CIO or a technologist who can keep 80% capacity free, but that's the law.
Very interesting, and I think very differentiating points which exist in the banking sector, perhaps. Thank you so much for touching up on those, Rohit. In the interest of time, maybe we can take one question from the audience, and the one that I would say is relatable to what both of you are talking about is from Praveen Kumar. He's asking that a big bank was stopped to issue new credit cards due to some technology issue. Now, how can a tech expert avoid such a situation? Would anyone of you want to take it?
It's a bad scenario. So you getting sanctioned and stopped from issuing your credit card or a product in the market shows how poorly your whole ecosystem for the application management suffered. Every bank suffers from failures internally from technology. That's the reality. You don't have, these are machines, these are physical aspects which fail. And if you don't have the right resilience built or a right recovery pattern built, I think the regulator took the right judgment, but it was a bit too harsh. Instead of a sanction, you were asked from, allowing a product to continue, which is essentially killing a revenue line for a business. Uh, if it was a credit card, I am extremely surprised, because credit cards are a bit of a risk instrument, which allows you to have a very slow transaction processing pace. If it was debit cards, I would be worried for the bank, because if the debit cards are failing, which means there is something wrong in the whole pipeline of transaction processing, which is causing the damage to the customer. So if it was a credit card, then there is definitely something wrong with how the processing was being handled. And there is nothing much can be done apart from re-evaluating the whole ecosystem and rebuilding it and learning from the mistakes, and then going back to the regulator to allow them to resell it again. That's the only choice you have left with if they've already stopped you.
Subramaniam, would you want to add something?
No, nothing. Just test, test, test. That's what we can say. And Rohit mentioned there is money involved. So if you want to build that revenue, you need to have adequate testing done. You need to look at all the resilience that you can provide. So you fail to do your job there. That's it.
Perfect. So, gentlemen, thank you so much. It has been a very informative panel. And if I want to sum it up, if we see whatever you have shared today, I think there are a large number of examples wherein technology has been, in some sense, adopted and bringing in disruptions within the banking sector. But I think it is equally important to remain centered and realize the fact that this is a very serious industry and there are significant repercussions, as you just did mention in the last statements, and there are regulations and so on which needs to be taken care of. So in that ecosystem, perhaps the best that is being done is actually being done, which is a very encouraging sign from a banking sector. Any closing comments from any of you?
Nitendra, we have one more question from Shankar Narayan from the audience.
Mhm.
He's asking what innovations in data science are you leveraging?
All right, wonderful. So I think Subramanian did capture a lot of it, which I really liked because I am from that field. Rohit, would you want to add more to that?
Absolutely. So you both are the experts in data science space. I am not. I am a generalist in technology. But let me share my perspective. It's the basics. We're starting off with capturing the data. We're aggregating data into a common space. So every bank today is running on a two-step journey. First step is to at least get proper business intelligence into space. Getting a Hadoop cluster does not solve your problems. What solves the problem is what models come out of that, what analysis comes out of that, which can be consumed and utilized. So, collecting the data and then running a job for, let's say, 5 years of data or 10 years of data. So it does give you some picture of what is happening. So first step is to run business intelligence, which is to have some baseline data, some baseline information, which is about revenue, customer segmentation, spend patterns, and then designing products around it is the current state which most of the banks want to target. Now, there are some banks which are ahead in the journey, who are running real-time analytics by streaming their core data from various platforms and running real-time analytics and dashboards. They are a question of choice. For example, Deutsche Bank, Subramaniam mentioned, they're using Tableau, Hadoop, other technologies which allow them to run dashboards or reports, create reports for business teams to consume them. um, my perspective, we should not look at technology, we should look at the use of that technology and the outcome of that technology. If you are able to build a particular outcome from any technology used, and that gives the business that edge and the advantage, go for it, as long as it's not going to disrupt your internal operations, and it gives an edge to your sales people, operations people, customer management, customer experience. Please go for any technology that you choose, deem fit. But also on the back of your mind, just keep that that if you have to grow this and expand this, you should have the talent and the capability and the planning to do even expand it to a higher degree for consumption.
Thank you so much, Rohit. That's really helpful. And once again, I think we are almost on time, but it has been a pleasure to actually hear from all of you, both from a technology perspective and actually more importantly from a human perspective, how you kind of provide solutions, make changes, and so on, keeping a level head and realizing what is the right ecosystem rather than just going tech savvy and just using technology for the sake of it. So great learnings for all of us. And thank you very much for taking the time out and also for preparing what goes behind the panel in some sense. So really appreciate that. And I'm sure all the audience would have appreciated your efforts as well. Thank you, everyone.
Thank you.
Thanks to you, Nitendra, for the wonderful questions and the paraphrasing of those. Thanks for that.
Thank you. Have a wonderful day, everyone.
Yeah. Thanks, Namrata.
Thank you, Namrata. Have a good day.
Thank you, Namrata. Over to you.
invite your esteemed panelists for the thought-provoking discussion. Now, we have finance panel and the topic is decoding the future of financial services, seizing opportunities and emerging innovation trends. 400 plus attendees are watching this live on the website. Here I call moderator Mr. Praveen Kumar from Barclays, Ananda Karmakar from Aditya Birla Finance, Vijay Kumar from Art Housing Finance, Anand Sharma from Ashirwad Finance, Suresh Ishan from Mahindra Financial Services, and Shizu Rotter from Care Ratings.
So, Namrata, everyone is here, all panel members, so that we can start.
Yes, Praveen, you can start. Meanwhile, all the panelists are joining.
I think let's wait for a couple of minutes. 3:30 is the time.
Okay, sure.
So Namrata, how many panel members have already joined now?
Praveen, 3 panel members have already joined, and also Rakesh is also joining.
I think, yeah, officially you asked to join by 3:35, right?
Yeah, actually, first panel is has been over before the time. So
Okay. I think then let's wait till 3:35. Otherwise, I have to repeat and it will be boring for the audience. Hi, Rakesh.
Hi, hi.
Okay, we have Rakesh, we have Anand. Can you please everyone on your video? Okay, we have Anandya, we have Anand, Rakesh, me 4 out of 7. One is anyway not joining.
Hi, Anand, how are you?
Sorry, I was on mute. How are you doing? I'm doing good.
I'm good, I'm good, I'm good.
राकेश जी नमस्कार।
नमस्कार आनंद जी, कैसे हैं आप?
एकदम बढ़िया है। आपकी नई जर्नी के लिए बहुत बहुत शुभकामनाएं।
हम शुरू तो करें पहले सारी शुभकामनाएं हम इकट्ठा कर रहे हैं।
Good that you guys know each other.
Yeah.
Praveen, you can start now.
We can start?
Yeah.
I can't see another 2 panel members, Suresh.
They will be joining soon.
Okay, let me start then. Good afternoon, everyone. It's privilege to be moderator for this panel discussion. Topic is very, very heavy. As you can see, topic is decoding the future of financial services, seizing opportunities and emerging innovation trends. Let me start decoding a few things and to set the context before we reach out to all our esteemed panel members. First, let's try to understand what are the financial services. Then we'll try to understand what is the future of those financial services. And then we also try to decode what are the opportunities we have, what are the new latest innovative trends we have in future. Financial services, as you all know that, right? It is very simple. All banking services, insurance services, stockbroking services, mortgage, lending, payment. These are all called typical financial services. Now, let me understand and to what is the future of this financial services. Last 5-10 years, we have been seeing the phenomenal growth in this financial services, especially on the tech front. Lots of fintech we are seeing, lots of new innovative product is coming. Bank are investing a lot on their technology fund budget. They are also doing lots of digital banking, and they are doing pretty good. And 5 years back, if I remember correctly, I used to afraid that fintech will kill or eat all the financial bank or bigger bank, right? But it did not happen. Rather, it has become the more on the collaborative partner. Fintech is filling the gap where this financial big giant bank are not able to reach, because the gap between customer expectation and the banking capability is too huge, and this gap is being filled by the new innovative technology, fintech companies, the tech giant, etc. This gap is too huge, and I think I think that everyone has their own pie in that gap to fill, and the sooner this gap will fill, the better the customer experience will have. And to fill this gap, we can see that lots of fintech companies are investing a lot on this. If you take the name of fintech, we always remember the payment, the Paytm, PayU, Freecharge, because these fintech are more on the payment side, but we are yet to see the other financial innovation in the lending side, in the credit card side, in the the advisor side, wealth management side, and this is where the future is. Payment is almost very saturated now, payment industry, but we are yet to see this trend into the new financial services. uh, Happy to explore with this this esteemed panel, combined experience. I could see that more than 100 years with this panel members, and I can see the lots of experience we have. The takeaway for the audience would be that what are the trend you could see, what are the innovation you could see, that what are the new fintech company are trying to explore in this market, what are the disruption you could see in future, what would be the kind of amalgamation and then the merger you could see. These are the some question, and we'll try to find out and also to get answer from the esteemed member. Let me start with the first with Rakesh, since he is sitting next to me virtually. Rakesh, first everyone please share your initial thought, and then we'll further deep dive. What is your initial thought on this emerging trend, and also on the seizing the opportunities in this future of financial services?
See, as in Hindi, generally we are saying Lakshmi badi chalayaman hoti hai, chanchala, and we are talking about the financial services, which denotes the Lakshmi. So, in last 20-25 years, I have seen lots of changes within the financial sector. When the public sector where banks were pre 95 were dominating the era, then the private sector bank came. Now to post 2013-14, that's a new gen bank also started coming, the payment bank and then other kind of banks. But then in between, that's also some private players started coming and started changing the delivery and kind of services which is being given to client, bringing new technology, by bringing new technology, by bringing new innovation. So customer and bank distance has gone very narrow. Before that, one has to visit the branch. Nowadays, nobody is visiting branches. Everybody is either mobile or the computer, or if not, then it's a branch or the bank itself is visiting the customer. So that big change has been brought into that financial services, which says that the financial inclusion is working very fantastic way in this country. But for me, that from money to cryptocurrency is another kind of change, which may come in near future. We are seeing that the cryptocurrency has been for last 10 years or 6-7 years has been into the picture, that people are trading on and off in the cryptocurrency. But how the cryptocurrency is going to change the whole financial sector would be another paradigm shift. When banks would not be controlling the currency, and if the banks are going to control the currency, how that's cross-border financial things are going to happen. Still, we are dealing for cross-border, that's a dollar or that pound, dollar, pound, and other currency. But if the cryptocurrency is going to come into the financial sector, changes how this whole thing is going to change. And then the services would change. I think that's down 10 years. And in that, the whole technology is going to play a big role. But then again, there would be big divide between the rural India and that's urban India. Still, rural India is far, far behind that having the good financial services at their doorstep, accessing the everything at in their hand. Whatever is being used by the million population, which is very computer savvy and other part. So again, the things would be in a kind of that's a development phase from how to bring the rural India nearer to the urban India. That would be a challenge for regulator as well as that's a player who would be doing that. So let's see that's how everything gets panned it out, and that's what kind of new financial services, as you explained, that many financial services are available. How many are going to come new in future, uh, except remittance, insurance, and other part. So let's see that and have a more discussion on that. Given an Anand and that Charnam, that's experience on that, and that how we'll see how the changes are going to come.
Thank you, Rakesh. I think you have touched upon three important things, and we'll explore more on those three things. One is the cross-border remittance, and I remember that there is one fintech company based out in UK called Revolut, right? And they are doing a wonderful job on this, converting pound to dollar, to euro, and to rupees kind of thing. And they are coming to India as well. I think Indian fintech company may imitate that as well. On the financial inclusion side, and we already seen and experienced the jam that launched by Modi ji, and the direct benefit transfer and the financial inclusion and the opening of banking account for those downtrodden people. That we are seeing that fintech is really doing great job, which big bank like State Bank or all the public sector bank are unable to do after 70 years of independence or their existence. The third point about you touched about that cryptocurrency, that we are seeing that in the, especially the technology like blockchain, right? All banks are using the blockchain. I think future will be very wonderful. Using this blockchain technology on this cryptocurrency kind of thing. I'm very excited about the future. We'll explore more on this, but to go to the Anindya, which sitting next to you, Rakesh. Anindya, I think you are coming from the financial company called Aditya Birla Group, and you are also heading the digital technology over there. Happy to see your thought that what are the emerging trend, what are the technology innovation you are personally doing in your company, and how you are seeing the future of financial services, especially in India.
Yeah, thank you, Praveen, and hello everyone. So in a nutshell, I think because these are opening statements, I'll keep it very brief. I don't know how many people know the word bank comes from the Italian word banco. Banco, in Italian basically is a long bench, right? And these benches were actually kept outside places of worship or in open markets. And people used to come and then take loans or currencies from bankers. That's how basically banking started in the modern world. But obviously we have come a long way. And today we don't talk about people giving out money from benches, but really money is traveling electronically throughout the world, crossing borders. I think the driver, which is kind of making these changes and driving the innovations in this space, are basically two things, right? One is that your mainframes, etc., have given way to cloud. So cloud is basically where most of your data is getting ingested, and insights about customers are coming out. And the reason these data are getting generated is because of the cheap internet and people having smartphones in their hands pretty much all over the world. I think there is one study I remember reading which says that more than 900 million customers, would have phones and internet connections in India by 2023. That's a massive number, right? We're talking about almost a billion people in India who are going to have, and that is going to produce enormous amount of data. And because of cloud, because of AI and machine learning, I think these are giving ways to new innovations in the operating models, in the banking models. And really what customers are looking at, and mostly the young customers, right? The younger generation, they do not typically consider, let's say, an established bank of 30, 40, 50 years as a real bank, right? They want banking, but they want banking anywhere and everywhere. And that's really causing, most of these innovations to take place. So that's my initial take, about how the future will evolve, because of some of these things.
Correct. And coming to taking clue from the younger generation expectation, right? There is a say in financial institution, within the financial institution, that if you are not able to create greater value than Amazon Prime or Netflix, then you are in the wrong business, right? This is the expectation from the next gen customers from bank. And my son, who is teenager, right, he opened a first bank account with Paytm and Apple Pay, rather going to State Bank of India or any HDFC bank. And they are so much digital. I think fulfilling their expectation will be the major challenge for the financial services company. And we are excited to see that how next 5 years, 10 years, that gets shaped. Coming to Anand. Anand, I think you run some microfinance company, and happy to see your initial thought on this trends and the emerging innovation. What is your initial thought?
Yeah, so good afternoon to everyone. My initial thought will start with something which I always quote. Our country is divided into two pieces. One is called India and another is called Bharat. India, where the 30% of the population with white collar job, having all the facilities, they understand what is technology. And 70% of the population, which is middle class, lower middle class, or poor people, and we serve to them. We have to understand how the psychology has changed as a customer. If you look to our fathers and forefathers, they used to first save the money and used to create assets. Like when they used to get retired with the retirement benefits, they used to build the house by taking some amount of loan from either that time SBI or LIC. There were two, and that used to take a lot of time. And that point of time, we have a very, very limited number of banks with a lot of, complicated process to get funding. Over the period of time when the private sector bank started, ICICI and others, then there was a shift in the mindset also to the customers or the people like us. Like the money is available, why should I wait for 20 years to have a house when I can have it now? Or why should I wait for another 10 years to have a car when I can avail the car loan now? So that was the shift from the mindset from one generation to another generation. Looking to that, and the moment the technology grown up, it started with various digital campaigns or SMS blast and all those things started. They started provoking the customers to change their mindset, and that is how the mindset comes out. And then it is started, okay, they are coming to your doorstep to collect your documents, they are doing processing, and ultimately it comes down where sit on your computer or mobile phone, you can do anything. Having said that, still we have seen in India as of today 73 crores of population is having mobile phones. It's still a long way to go. And even in the rural areas, if you go to see, they can read, they cannot read, they cannot write, but they can communicate in a local languages. So yes, the disruption has come out to a stage where a guy who just joined a job with 30,000-40,000 rupees is able to buy a house, a car, and whatnot, thanks to all this digital disruption and the fintechs and other facilities. But still, I could see there is a long way to penetrate our rural areas. That's my view as of today.
I guess Praveen has disconnected. तो आनंद जी उधर वेदर कैसा है?
As of now, pleasant for last 1 month after this cyclone. Yeah.
Oh, Delhi is quite cold for last.
Apology for this technology disruption. My Wi-Fi goes down, electricity goes down in my area. Hope you are able to hear me now. All good?
No, your voice is. We can't listen you.
I'm able to hear Praveen.
Now you are able to hear me?
Yeah.
Okay. Yeah. Apology for this technology disruption, guys. This today is what, Wednesday. There is some electricity cut in my area. Okay, I'm back. Thank you, Anand. And you really talked about the India and Bharat. This is what I heard, and before it got disconnected. And yes, I could see that no, there are very distinct behavioral distinction between India and Bharat people, and hopefully we will be able to cater these two very different expectation, and hopefully we'll be able to reach out to India as well, to Bharatiya as well. Thank you very much, Anand. This is very good. Do we have any other panel member? Sorry for that. I think we are just three, right?
Yeah, we are only three.
Okay, now coming back you to Rakesh, that we are seeing that there are lots of technology and available, and many fintech are using the latest technology as well. But bank is also investing in a lot on the technology. Could you decode the where is the gap, right? Bank, I worked with JP Morgan, I worked with Barclays, Deutsche Bank, HDFC Bank. They have the huge budget, but still, why they are not able to fulfill the expectation of Indian customer or customer at large? However, fintech, they understand the problem quickly and immediately develop an application able to cater and develop and grow their business in quick time. What is the difference between the fintech and our giant bank?
See, we all understand that moving anything which is big takes much time. So giants are giants, and those who are small, they can adopt very quickly and very easily. But the point is that that's what they are doing really, what fintechs are doing. See, in financial world, there are many products. If you categorize 3, 4, 5 products are there. One is that's where you provide, banks or financial institutions are providing security to the money. That's when people can save, people can invest, people can create a FD. So that's kind of product is there for their future thing. The second product, which I understand broadly, that people go and take loan from banks or financial institution to fulfill their aspiration. Probably that's income generation or buying asset. So it's a kind of future promise that where customers are making that I'll pay back you the money. Third is that's itself there is so many financial products which is being marketed. Like you talked about the financial market, like share market or other, where that's itself shares are being traded. Basket of shares are being traded. So many instruments are there. So fintechs are picking up a small section of those things rather than and going resolving the whole thing. But if you talk about the HDFC Bank or the big joint, they are dealing with mostly all the products. So to bring a change within the big institution will require a little more time, and that's testing more, because that's one thing can disrupt another thing. But here, that's a small entrepreneur who are new, they can go and they can quickly bring out the solution. But again, in my point, mostly till now, that's scale up has to be done within the fintech market. Once they reach to that big size, will be real testing for the fintech. It's not that suppose that some fintech company came down and they said that we are providing SME loans. But to reach up to the Equitas SFB and providing the loan has a huge task. It's not that you have disbursed 10 crore rupees or 20 crore rupees or 50 crore rupees in a year and you said that your model is perfect. Until unless you bring out the million customer, 2 million customer, 5 million customer, and which will require the scalability, plus which will require the sustainability of the model itself. Still, fintech models are being run on that equity support. I don't see that mostly are not running on that revenue model. Even if you talk that EduTech, they're another fintech, but any technological model, mostly they are being run on the equity. Take example of the Paytm. Paytm still is making losses, and nobody talks about that. And if the banks would start making that big losses, apart from the NPAs, there would be hue and cry that our money is at risk, saving let's say whatever the investments has been done by the depositor. So then the depositor protection will come. So both institutions are having a different kind of nature. They do not have that much liability towards masses, the new fintechs. Though the banks and other financial institutions, they are still having the kind of accountability and liability towards masses, because they are the keeper of their money as well. So that's difference which I find, and I think that's Anand and other would also be there. But in my view, these are the two basic points.
I think yes, you're right. Big elephant, it is difficult to move. But I know this is where 5 years back I was listening one of the fintech seminar delivered by Nandan Nilekani, and he predicted that there will not be any bank, and all this fintech company will completely demolish the bigger bank. But this has not happened, right? Still, they are moving slow, but they are smartly moving, and also they are trying to acquire all this new technology fintech company. And in that seminar, they talk about would it be fintech or it would be tech fin, right? This is very kind of thing. It's a technology plus finance, or finance first and then technology, because they are more on the technology side, right, than aligned than to financial side. I think, Anandya, over to you. And you talk about that cloud technology, right? And related to that cloud technology, I just would like to understand from you that what are the technology trend you could see, and technology, number of technology, new technology are huge, and number is very high. But what are the very serious use cases you could see, and you could see that those technology can be leveraged in next 2 to 5 years, or kind of thing. Like blockchain, people talk about artificial intelligence or machine learning. But any use cases or any new technology you personally are working, any personal experience you could share?
See, from a financial, so there are of course a lot of new technologies, and it's not only financial services. Every industry, is kind of adapting to the new technologies. But from a financial services perspective, I think some of the things that I have seen work, as well as some of the things I think will be very, very important from now and going forward, is to be able to create, at least from a, so I'm not a technologist, but let me kind of give you my perspective of how I think this will this will move. Firstly, I think it's very important that there is some kind of a modular architecture which is built, right? So these are almost like the Lego blocks. So you have the small blocks that you, so unlike the earlier mainframes, right, where you had, let's say, the size of, let's say, a dishwasher and then the size of a refrigerator and the size of a big house, right? So there was no, so you had to keep these storage at some place, and that's how it used to work. And these are all called the legacy systems. And I think many banks in the country, the private banks for sure, they started the journey towards the new architecture some time back, and they have obviously come a long way. I think many of these banks understand what is happening and how they should be preparing for the future. So firstly, it's very important that the modular architecture is there. Secondly, the API banking, we all know the API banking, right? So earlier, creating the or integrating two systems used to be a big affair, right? So technology team would ask for a proper BRD, and they will study that, and then they will, the integration would start. And if you have integrated two systems, if you have to integrate with another system which is pretty much the same, that will be another task, you have to start. I think with the use of API and banking as a service, right, some of these things have become much easier, right? So now it is about at what speed you can go to the market. Okay, how quickly you can launch a product or a service. And you think of, any of these global digital banks, and you spoke about Revolut, right? So imagine a Revolut or any of so these are still not global, but obviously there are aspirations that they will become global. Just imagine that there is a global digital bank whose customers are accessing their accounts on the mobile phones. They are able to make the payment by the tap of a wearable that a watch, a smart watch that they are wearing. They are able to transfer money across the border without paying anything. Today, sending money across the border is a very expensive affair, right? But it is possible to send money across borders anywhere in the world practically at a zero cost, right? Today it is possible. There is a technology which is available which you can actually use. Now, obviously, there is a long way to go if you have to do some of these things on a blockchain. But or someone who is actually swiping his savings into a investment portfolio, and this investment portfolio has been created by an artificial intelligence system. Okay, not by a typical face-to-face relationship manager who is talking to you and understanding what is happening. It is impossible for a human being to ingest so much of data which is available and to be able to give you the right insights, right? Or able to kind of detect frauds and limit the frauds which are happening using artificial intelligence, or being able to give you a loan at the time of taking or buying a product on a real-time basis. Okay, some of these things is possible only because today the technology is available. API banking is what people are using. People are using a lot of AI first strategies. There is a lot of data which is available, which is now being worked on the cloud. People are using the hub and spoke model. So, the data is residing in huge data lakes inside the organization. And all your channels, your people, your employees, everyone is connected like a hub and spoke model. Okay, so you talk about multi-channel. So a customer can go to a branch, go to your mobile, go to the internet, talk to your channel partner. Everywhere the same data is available. Now, some of these things are possible only because there is the repository is basically central, and there is a hub and spoke. And in the hub and spoke also you actually try and connect the end devices, thinking that there is no good connectivity. At some point of time, maybe 5G will come, connectivity will improve. It will go across, even Bharat. The service charges for internet, etc., is coming down, and it is still the lowest in in any of the major economies in the world. And then the government, the regulator, have played a huge role, right? They have also enabled the unbundling and the disaggregation of financial services by creating UPI, India Stack, Aadhaar, e-sign. These have, and you talk about the payment. It is very, when you started, it has become, something which is where a lot of innovation has already happened. The unbundling of payment actually happened also because of UPI. Today, because there is UPI, I do not have to use a banking application or go to a bank to make a payment. I don't use a checkbook. I use something which is created by NPCI and the government. Aadhaar, I do not have to submit a paper KYC when I'm taking a financial product because Aadhaar is available, which runs on biometric. So layered modular architecture and some of these things which have happened is going to create an enormous opportunity for innovation and growth. At the end of the day, bank account is nothing but a store of value. I store my money into a bank account. Now, that is basically a digital concept because you store money in wallets today. How many times do you pay? At least, I can, if I talk about my personal experience, I've stopped paying for coffee with cash. Okay, I take out my phone. My phone is basically my wallet. My wallet resides inside the phone, and I pay for my coffee. And multiple such things, we are paying. I pay my newspaper guy with my wallet. I pay the guy who presses the clothes, using this thing, and everyone, the guy, the milkman, everyone, right? So the number of customers, and we talked about Paytm, right? Rakesh said that, who is talking about Paytm there? Look at the number of customers who are using Paytm wallet. Now, what is the game? The game is that, I'm sure a few days back, sorry, I'm digressing a bit. ICICI Bank launched iMobile Pay, which enables customers of any bank holding any account of any bank to be using ICICI Pay to make payment to anywhere that you can, wherever there is UPI or, with any other payment instrument. Why are people doing this, right? Payment is basically not something which can earn you money. Earlier, every time you had a value addition or a bank added a value to the customer's life, they used to charge money. Now that model does not work today. Okay, the model which people are trying to make work is how do you collect more and more and more data about the customer and his or her behavior. Now, if you are able to use, let's say, iMobile Pay, I'm just taking an example, right? iMobile Pay, any wallet you can talk about, where you can just connect any bank account of yours and make payment to any other bank account in the country. Now, the amount of data that a wallet is able to gather about you is really the new oil, right? Data is the new oil is what we call, right? It is not about charging money for every small value addition that you're doing to your system or to your customers. Similarly, on the lending side, and I run the digital lending business in Aditya Birla Finance. On the lending side,
interesting to understand in India that what exactly you are doing to make it digital. This lending side, we are yet to see the growth on the lending side, right? Payment
that's
side,
right.
we talk a lot.
That's right.
Yeah, if you could
So
share.
you're absolutely right. So payment, a lot of innovation has happened and driven by the regulator and the government together, right? I mean, our regulator and our government really have been very, very far-sighted in some of their approaches, in terms of Aadhaar and UPI and, some of the other India stack that we have created. But in terms of credit, you are right. I think the expectations are changing. Okay. Now, most of the customers, at least, we find, actually have something or some part of their lending journey happening digitally. Now, obviously, for a straightforward personal loan, the end-to-end experience, necessitates simplicity because it's fairly straightforward. And therefore, right from the application to dispersal, you can create an end-to-end digital experience without any human touch. Okay, now what is working is completely with the data which is available in the ecosystem. It could be the bureau, it could be data which is coming from SMS, apps, social media, payment gateways, e-commerce, telecom companies, wallets, even psychometric tests. There's so much of data available about a customer. You can use all this data, put that in a data lake, gather insights.
I think Anindya, it is interesting to listen. I think I have follow-up question on this, but let's move first to Ananda.
Sure.
Yeah, Ananda. No, you run the microfinance company, and I'm sure that you must be using the technology as well right? I would like to understand, because I don't have experience on the microfinance side, how they use, do they have the deep pocket to use the, costly technology? How much you are leveraging, or you are more into the financial inclusion side, less leveraging the technology, or it is complete balance? Yeah, or you are more on the tech side, less on this, field side? Could you explain in detail that how microfinance and
Okay.
technology relationship are there in
So
India?
for that, I will give you a very insight so that you can understand.
Of course, yeah.
Our interest margin or interest is spread is only 10%. So whatever we borrow and we lend. And the normal operating cost for any microfinance industry, a company, is around 6%. Earlier, the NPA used to be 0.5%, which has gone up to now 2%.
Because
So
of
it
COVID.
slowly, over leveraging the funds by the borrowers and all those things. So it has gone to 8%. So the rest is left with 2%. So we have to play very, very smart when in terms of spending money on anything. But this is a volume game. Our ticket size are only from varying from 25,000 rupees to the 60,000 or 70,000 or 80,000 rupees for 2 years. But the volume is enormous. So you cannot do it manually. That's for sure. If you start growing. So we have around 1,050 branches all across India. In 23 states we are present. And our branches are PC-less. We don't use PCs at the branches and all those things. Although our sales staffs and the branch managers are given a tablet by which they onboard the customer. Yes, we do validate their customers' Aadhaar card, voter IDs, take the credit bureaus, check and all those things. So technology definitely very much required for the microfinance because it is unsecured loan. The risk factor is too high and volume is enormous. So we have a very defined process. You have to meet the customer at that specific location, at that specific date, at that specific time, and we have to actually monitor everything. So the geolocation of the customer, geolocation where my guy has met to the customer at what time, where he has gone, to avoid the risk and ensure that the processes are being followed meticulously. And still in the microfinance, the disbursements are 100% digital now. Thanks to this Jandhan accounts, 100%, but the collection are still 90+% is in cash.
Oh.
90+% is in cash. Only 1 to 2% customers are willing to pay digitally. The reason is they are a daily visit customers, or their earnings are daily, and going and depositing in the bank, or they have some kind of mindset problem or timing problem or the confidence problem. Even you have a small outlet where you can go and deposit the money, they don't feel like to. And we have experienced when this lockdown is started and we have given them option to pay digitally. Even that time they used to take the cash, go to the nearest bank branch, fill up the challan, and they used to pay. And that still continues. So this is something where we need to break, and that is where I always say we
So
can.
if I may stop here, right, and this is just a curiosity, right? If they can learn WhatsApp, they can learn Facebook, why they are not able to learn your technology and start using the wallet and other digital form of
It
money?
is a matter of confidence,
Okay.
matter of confidence and money. Look, in this is where I say the Bharat is a part where the mindset is still not there. Yes, they use Facebook, they use WhatsApp,
Exactly.
they watch movies and other stuff on Netflix, Amazon, and YouTube.
Exactly. Yeah.
But when it comes to money, making a digital payments, that is where their constraint is, and that constraint or lack of confidence is because as a lending company, there are hundreds of thousands of lending companies came into the picture. They just lend and collect. Nobody behaves like a financial advisors to them to make them understand this is good, you can do it. And they can make them handhold them and make it happen. That is one part. Another part, which telecom companies are bringing a lot of problems. Every day, one new scheme comes and they change their mobile numbers.
Okay, okay.
The customers change their mobile number. Now I was getting say 80 minutes or talk time or 2 GB data in 100 rupees. Now another come, you will get something else. So very next day their mobile number. They never keep the postpaid cards. They always keep the prepaid cards. That is another challenge. Third challenge is within the family, only one person is having a smartphone, which everybody uses. So these are the challenges still there, but definitely they are inclined to, and as Anindya said, he's able to pay to the iron man or the milkman or the newspaper guy. It is the duty of individual like us to start around us. If we start doing it, the chain will get completed.
Correct. Correct. Okay, it's a very interesting fact, and I would love to continue this discussion, Ananda. And actually, I don't have much knowledge and experience on that part of the Bharat. Coming to you, Rakesh, right? I think you are also running your that microfinance, right? Subbu Lakshmi. So now, I could experience the two extreme behavioral economics, right? One is that son of mine kind of generation, they are very tech savvy. Their expectation is quick, fast, agile kind of thing. Another mindset we could see that Bharatiya log, their mindset is very very conservative, and they trust lack of trust. But the new generation, especially urban youth, are very very they don't believe much on the trust. They want the services to be faster. How to fill those gaps, and what is your thought on that? The technology will play a bigger role, or there would be responsibility from the microfinance company or public sector bank, or the digital literacy will come over the time. Well, what is your thought on that, Rakesh?
See, confidence comes from cushion. My son, your son would be having much more cushion than that people who is living in a rural area and his son is having some cushion because of the income, because of the asset we are keeping, and these people, what they are having. They are running for their survival. We are not for their survival. My son, your son is not running for the survival. So they can go and explore the adventure, and they are exposed to more technologies. Their mobile phones or whatever that is there is they use for survival, even for the agriculture. Mostly people are with the agriculture are running the tea shops. If you go to the more rural area, even the drinking water and so many things are not there, despite government's so much efforts. If you go to the particularly Bihar, UP, Madhya Pradesh, Chhattisgarh area. So that's a difference comes from that. That's awareness, exposure, and a kind of experience you had. So certainly they do not have exposure. What we have exposure, they don't see the Netflix. They don't see that Amazon. They don't find that so
My
many.
question was understood, right? My question is that how to fill that, whether this will come over the period of time while using WhatsApp, Facebook, YouTube, or there is responsibility of technology or fintech company to make them aware, to create the trust level, or company like yours company, should be going, reaching there, and they are, showing that, okay, this is also trustworthy, or it is a combination of all three.
See, so the issue is that that's how the government is going to develop the ecosystem, and our companies like microfinance institution or other companies, they are going to develop the ecosystem. If we, for the digital payment, because the POS machines are not available, so they cannot transact. If we go with the POS machine, we the debit cards availability, so many things are there infrastructurally which is required. Anand was mentioning about the depositing the money. Banks are still 10 kilometers far away. For withdrawing the money, there are no ATMs are there. So many things are there. Even in the small cities, if you go and withdraw the money, ATMs, we can talk about the Gurgaon metro cities. So I think one has to go and understand what is really required. Electricity. So the thing is that that's how we are going to build the infrastructure, and technology can come handy over there to bypass certain infrastructure requirement. That's to increase the outreach, like that's a UPI system and other things are which does not require ATM. If you but at one point you have to go and deposit the money at your bank account. You have to have a bank account. So the whole transaction or cycle of the money has to have that system where a person can get the money in their bank account, they can transfer the money into the bank account. That's one part. Second part is that again, as I said, that's mostly the economy is not that cashless in the rural area. People are buying. If you go and buy the vegetable in the rural area, and here we buy at 40 rupees the potatoes. There you buy at 3 rupees, 4 rupees, 5 rupees. So the absolute amount wise, this is again for their survival. So I think as long as and as their income is going to grow up, they would be adopting those things.
Okay, that's good. Do you see any kind of disruption happening on those part of the world, and any new technology product is coming, or any innovative product is coming from microfinance company last 2 years, or could you see that something is expected in next couple of years? What kind of innovation?
In last 20 years, microfinance institution, at least they build up that credit history of those people.
Okay.
Through the credit bureaus. At least 3.5 crore families are having their credit record for 6, 7, 8 years, which would be handy for the banks and other bigger institutions to go and offer other products. What Ananda was talking about, the behavioral pattern of that thing. So the data has been captured by the microfinance institutions as well. In their system, repayment behavior is there. That's credit bureau. The repayment behavior is there. So I think that's someone have to work on those product as well. That how to go and address those things. But still, people are struggling with the normal problem of saving the money and getting the money and getting the loan. Even getting the loan is not easy, except if you leave out the microfinance institution. Getting the loan from banks of 25,000 rupees is still far, far away. You cannot get.
Yes.
Despite saving everything from here, your driver cannot get 25,000 rupees loan by visiting SBI or ICICI or HDFC Bank. We get only calls because they know that you have a bank account with them. And
yeah, I think I remember this is the one of the demand of this farmers movement, right? This removing this middleman, because they are the banker for those poor farmers, right? And that is one of the argument I was listening other day in TV debate. It's very interesting, and we'll continue this discussion. Now coming back to again Anandya, right? Now you belong to some matured financial organization like Aditya Birla Group, and fintech also includes at times it is called reg tech, right? Regulatory technology as well. And as you know that financial market is completely governed by the regulators like RBI, SEBI, and kind of thing. Uh, do you see, or have you encountered any kind of roadblocks, or any kind of setback from the regulator side, or not setback, roadblock, at least kind of break they are putting on your digital journey? No, first you have to get this, then you can launch this product. Any kind of thing you could see? Recently we all saw the experience of HDFC Bank, how RBI has put the restriction that you cannot grow more credit card holder unless you develop your technology infrastructure in mature stage. So how do you see the regulatory environment is supporting digital economy here in India? Yes, we'll discuss a lot on the payment side, but any other example, happy to listen from you.
So I think firstly, the Indian regulators are, I would say, fairly foresighted. And that's the reason that some of the things that they have created in terms of KYC infrastructure or the payment infrastructure goes a long way to kind of, and the Aadhaar as well, which was a government or a semi-government initiative. I think these go to say that, our regulator is really enabling the digital ecosystem in a big manner. I think KYC is one area where, of course, much more can be done using the whole Aadhaar system. Today, it is very smooth and it is very seamless when someone is taking a loan, and you don't have to actually give your KYC physically, but up to 60,000 rupees, you can do an e-KYC. Otherwise, you will need a biometric. So that basically needs a physical touch. But I think looking at that, the regulator also came out with this whole video KYC plan, where you can do the video KYC remotely, and the customer does not have to actually submit anything. Now, these are very initial stages of video KYC. I think a lot of people, including us, have started using video KYC, and we are going through the learning process. And I think the regulator is also probably looking at how this is shaping up and taking, going forward. So, so video KYC or some other form of, video KYC in the future is going to help us on the KYC, piece as well. The regulator, I'm sure, and as per my knowledge, is also looking at those sandboxes where fintechs can come, and the regulatory sandboxes, and they can actually implement and look at some of the new ideas and innovations that they have, and actually test that out inside the sandbox before you can actually go out. So it is happening in many advanced it's happening in Singapore, in China, in Europe, in UK, where the regulator is actually creating these sandboxes where fintechs can come in. So see, the regulator has this very, very important job and responsibility of ensuring that things are not going out of control. At the same time, they have to also balance the scale to make sure that there is innovation also happening in the system, right? So I think, we obviously are looking at some examples, in my view, of, some of the other countries nearby, as well as, in the West. But I think our regulator is actually taking the right steps.
Okay, and let me play the devil advocate here, right? Like payment data, right? Payment data, regulators say that it should not go outside of India, right? Lots of international banks, especially, are struggling to comply with. Even they are not much inclined to go to the cloud, because cloud data nobody knows, right, where it is and staying. Those such any thought on that? What was the
So I
intention,
think,
and why it's kind of stopping the digital journey, or not stopping means at least putting some break on that?
no, I don't think so, really, right? So you can have private clouds which are based in India, right? So the cloud need not. So I think see, again, like I said, right? I mean, the regulator has a very, very important role to play, so that the data integrity and the privacy has to be maintained, right? I mean, today it is not India, it is many countries who are actually making these rules because of, and for valid reasons. Okay, because today our data is there everywhere practically, and how it is getting misused, we do not know. And it is a very, very important part of ensuring the regulators' part to ensure that this data is protected. Now, you can have your data in a cloud outside the country. The regulator is not saying do not use cloud, they're saying have it inside the country, right? Do not have it outside, so that you can use the computing of the cloud, the power of the cloud computing. But at the same time, they have to take these steps. So I don't necessarily see these steps as a hindrance to innovation, but I'm sure that there are fairly robust thought process which has gone behind taking some of these steps. And I can tell you, this is not only our country, right? This is happening in many countries in different ways. There are different steps being taken depending upon the context and the situation of that particular economy and the country. So like GDPR, you would have heard, right, which is a big thing in Europe, and those actually get put a lot of constraints on how data can be used, and with whose permission and in what ways it can be used. and some of those GDPR. So in fact, our own paper you would have probably read, it had come out, a discussion paper, and we are also thinking, our country is also thinking in terms of what more can be done to secure the privacy of the data. So I think it's important to get the balance right. Uh, uh, Untethered innovation can actually create a lot of havoc, which will be very, very difficult to control when it goes out of hands, right? So that's my take.
Yes, yes, I think I do agree with that. It has to be the right balance, between national security and the innovation, and the digital and the regulatory, guidelines, etc. And RBI and our regulator, Government of India, are trying to find the right balance. Yes, there could be some kind of disruption, but yes, it is right to implement. Okay, I think we are reaching. We have time, another 15 minutes. Let's go one by one, and starting with you, Ananda. What is your closing thought, or any summary, any kind of put of this entire discussion, and to take away by the audience what exactly your message is as a
So see, I think I have. I'm sure you would have heard Bill Gates once had said that we need banking, but we don't need banks anymore. Okay, because Bill Gates said that, a lot of people started thinking about, what exactly, and we know what basically it means. I think banking and financial institutions of the future will be built around people and what people do. So as we are working, as we are relaxing, as we are eating out, as we are watching movies, shopping, playing, whatever we are doing, right? Banking and banking services, okay, will basically play around and will be built around people. Now, it will be delivered when and where people need it. We will all need banking, but we may not need to go to a bank anymore. And I understand, a bit because about the whole micro lending business as well. And I can tell you that the revolution is coming there as well. Obviously, it will take a little bit time because the basic infrastructure of internet and smartphone, right, that is reaching. Obviously, it is reaching, but reaching slowly, and the expected incomes and the disposable incomes, etc., are also rising. Okay, of people out there. So things, in fact, I was I was pleasantly surprised to hear Anand. And this is a truth, right? 0.5% used to be the NPA, which has gone up, or slowly over a period of time. But these are people who want to pay back because they need the funding again, right? Because it's not like they want to default. It is because of some circumstances which is very temporary. They're not able to pay, but they eventually pay back. And that's why, thinking about a 2%, even 2%, NPA for a market like, people don't understand this world, right? But slowly this world also will change. uh, India is not one of those countries which has a lot of branch presence in the hinterland in Bharat. Okay, so there is no way, but some of these technologies will seep into these people's lives and will create a change around their lives. So that is bound to happen. So that's basically, I think, and look forward to that future. It's going to be very exciting.
Yes, and we are seeing the lots of evolution, and new technology products coming across world, right? Now in UK, one of the bank started finger pay, right? No need to have even credit card, plastic card, mobile, UPI, nothing. Go and just put your finger, and that will be debited, right? That technology, I think I should in India also it should be picking up maybe in next couple of years, and it may come. So there are a number, and I can talk on and on this, but number of new technology product is coming in across the world. Now coming to you, Ananda, as part of your closing thought, right? That where do you see the future of especially the microfinance services, and how do you see the technology adoption? What are the disruption you could see, and what are the silver lining you could see?
See, according to me, and the way it is going, I could see 2025.
Mm-hmm.
By 2025, we can say we are digital India. Another 4 years, 5 years max. The reason is, as
Thanks
on
to the
today,
COVID. Thanks to the COVID as well.
thanks to the COVID as well, the good thing about is the infrastructures are ready. Almost, there is no problem with the infrastructure as on today. Could be exceptional places, 1 or 2% of the geography of India. The second thing is, as a lender or as a financial service provider, we need to educate our customer, make them believe on the technology, hand hold them, and
Yes.
make them use. This is very important. I think that every company has to build it in their CSR activity. Okay, today I will adopt 10 villages and make them, digital literate. The third thing or fourth thing which I would like to
So
say.
Anand, no, I basically belong to Bihar, right? And I run one NGO called Digital Literacy in remote area of Bihar, and I do a lot of work on that. And happy to.
So now the other thing is, I was talking about language. Yes, technology bots are there, right? They talk in English or 1 or 2 maybe national languages. The problem with us is we have around 22 official languages and 780 dialects. 40% of our population can communicate verbally in a certain regional languages, but they cannot read and write. It is time for regional language voice bots. If that comes, it will definitely bring a disruption. That will be the disruption for me.
So that is already there, right?
No, it is not there in all the. Even if you see 7 major languages, if you say Hindi, Tamil, Telugu, Malayalam, Bengali, and the languages we speak in the northeast states, Assamese. These are the 7 languages. They are still trying and struggling with Hindi.
Okay.
It is not completely. The voice bots and voice-based transactional system is going to change the rural India completely. That's why I thought.
But I know that few of the fintech or not even fintech, few of the technology companies, startup, they are working on this financial.
Yeah, and that is the reason I say
Yeah.
2025, another 4 years.
Yes.
I could see it will be. We can easily, proudly call it is a digital India.
Yes, and because of the 5G and because of the rollout of the fiber technology across all the villages, I think those are the very silver lining we could see, and we are very hopeful in next 5 years, as you rightly said, will be complete digital, including the your customer.
100%.
Yes. Okay, coming to you, Rakesh, just share your closing thought. What are the disruption where you see that our financial market and services will go in next 2 to 5 years, and before we wrap up?
See, disruption is an ongoing process. What we predict in 5 years, probably that's disruption would be much more than in the 5 year. That's one part. As I have been speaking, that's my wish or my kind of thinking is that is still financial or the banking product we see is a very kind of separated product for elite class or while we educate them. I don't see that in class 5th or 6th or 4th, we teach about financial literacy. We don't introduce our child with the banking. We don't introduce our child with the saving account, how to transact, what is UPI. We see that they are kid. They should not be entering into the money matters. So money matter is the adult preview. So I think that's in the rural area also, in the urban area also, we should start, and CBSE or the ISC board or the government of India should start taking initiation to have a kind of small curriculum while they are teaching history, geography, how to produce chlorine or whatever. I think that's the more subject with the life is money. and we are not teaching at that level. So once we start teaching, that the disruption would be much more fast, because they would understand that guys 13, 14, 15 years, they are not knowing much about the bank, the product, the savings. They only know that we have to deposit the money or the piggy bank in the family. So that part, I think, that has to be done by that government of India to bring out the ecosystem. Secondly, the institutions like microfinance, or the housing companies, or that fintech company would be doing their job to bring out more awareness at a ground level, and things would start evolve. I don't think that we can say that 2030 is going to be the stopping year. We would not learn. We'll be doing something else than the technology, probably that's which we cannot today even think of. So, yeah.
Yeah. Yeah. Yes, no, other than payments market, I also personally observed that lots of disruption, is coming, to disrupt the even wealth management side, right? I think one of the bank has launched the robo advisor for wealth management. That robo advisor is very smart, and he knows each and everything, about your behavior, your credit past credit, everything is spending, behavior, everything, and he will advise you very smart way. And it is, I think, that is, if that is successful, an entire wealth management may get disrupted. And there's lots of things are coming, in the new financial market, hopefully, and things will be exciting, as many of you have rightly said. Till next 5 years, till 2025, India will be the complete digital economy, and we could see lots of innovative product in the market. And we could see that there may not be the banks what we have tomorrow, they may exist. And as you are seeing the trend that Apple Pay or Uber Pay or Geo may take over few of the banks. I don't know. Next 5 years would be very exciting to observe the Indian financial market. But yes, thank you very much, gentlemen, and it's been wonderful. Personally, I learned a lot from Anand and you, Rakesh, about the microfinance market, and really, I got enriched to know about all your experiences. Thank you very much, Anandya, to learn from you the technology side and the digital side. Thank you very much. Over to you, Namrata.
Thank you.
Praveen, there are some audience questions as well.
Okay, is there? We
Yeah,
have 5 minutes. Yes, happy to take.
yeah. So, Hina Desai, she's asking what app has also launched payment service. They have very large database. How you see the future of finance from here?
Come again, come again.
WhatsApp has launched payment service.
Okay, WhatsApp. Okay, yeah.
They have very large database. How you
Mhm.
see the future of finance from here?
Yes, I think, Hina, it's a really great question and very relevant question here, right? This is what I said, right? Tomorrow, next 5 years, we may not see any bank, and any company, any tech company may take over maybe the next bank. And this is where that Facebook and WhatsApp have registered with the regulators, US regulators, India regulators, lots of right, and it will be very exciting. Even Geo Indian company have registered lots of business idea with our regulators. And WhatsApp Pay, as they have the large database, and they started with the payment, but I'm sure that they will not stop with the payment. They will go to the peer-to-peer lending. They will go to the wealth management, because they read your messages, they understand you much more than the Indian bank or any bank, right? I think it is again exciting to see that how WhatsApp Pay or Paytm or Geo Pay, will come out in future. But as I said, right, tomorrow any tech company will be the bigger bank than Indian existing bank. Right? It is exciting place to observe and watch, Hina. And I'm sure that WhatsApp and Facebook, Instagram combine this entity, and we have the great plan to really disrupt the banking services, really, really. And I know many things, but it is coming from unknown source. They have not confirmed it, but yes, they have much bigger plan like what Jio have. Jio has, it's not only, they are not limited to the issuing the Jio SIM card or launching the telecom. They have the much bigger plan to disrupt entire Indian financial market, and interesting to watch. Hope I answered you, Anyone could answer, Anandya, Anand, Rakesh, anyone could add if I miss anything.
Just one point. I think WhatsApp is not only about making payments. I think most of the companies today, I'm sure all of us have experienced, WhatsApp is being used in a very big way for service. Right. So every company is using WhatsApp, for big service. In fact, we have almost 250 services as Aditya Birla Capital on WhatsApp. Because it is being used by so many Indians, it's a very good place where you can engage with your customers.
Yeah.
There is another question from Padmaja. He is asking, how is the customer expectations changing for digital finance? Have you started new instruments?
Yeah, as you know, in my initial remarks, right, I said that there is a huge gap between customer expectation and the current financial services, rendered by our established bank, and fintech is trying to fill those gaps, and this gap is too huge that even technology companies also, telecom companies also trying to fill those gaps, and this, as I said, it will be interesting to watch, next 3 to 5 years, how this gap is fulfilled, and by the financial company or the fintech or the tech company, and tomorrow Apple Pay or Apple Bank or Uber Bank or Amazon Bank. I think this is where Geo Bank would play a very critical role, and they are really understand the expectation. They have the very niche product to cater the particular requirement of the services. Accordingly, they keep on launching such kind of very niche product to just fill those gaps, and one by one they are launching, and this is where I think tomorrow there will be the big financial giant. This is where I can say anyone could add here, Ananda, Rakesh.
Two things. The social media banking, I will call it as social media banking. Social media banking is going to take the front seat unless until some regulation comes which stops them. The second thing is, whatever be the infrastructural gap, I think that in next couple of years it will be fulfilled, and then sky is the limit when it comes to digital banking.
Yeah. I think we have reached on the top of the time. Thank you very much, gentlemen. Again, thank you, Namrata. Over to you.
Thank you, all the leaders, for sharing your thoughts. Now, we have our insurance panel for the day, and the topic is unlocking and leveraging the potential. Now, we have insurance panel for the day, and the topic is unlocking and leveraging the potential in BFSI value chain. 400 plus attendees are watching this live on our website. So, here I call moderator Mrs. Puneet Kaur Kohli from Universal Sompo General Life Insurance, Ankit Goenka from Bajaj Allianz Life Insurance, Amrish Kher from Max Life Insurance, Raj Srivastava from Reliance General Insurance, Kamlesh Manuja from Edelweiss Tokyo Insurance, and Shweta Srivastava from Pole Merchant Finance. Puneet, you can start.
Good afternoon, everybody. And I give thanks Adin Global in terms of this opportunity to bring everybody on the common platform. And I wish all the best to all my co-panelists. And let's share some thought processes across different industries, what exactly we would like to do in terms of like, the COVID-19s and the BFSI growth that we are foreseeing in terms of like post-pandemic. So I would just like, I will start with Amresh to start with like, the COVID-19 on the BFSI growth. You can say that what will be the impact of COVID-19 on the BFSI growth in terms of, the decreased productivity, lockdowns that have happened.
Sure. Hi, Puneet. Hi to everybody else. And good evening, everyone. I think thanks to Alvin Gobil for inviting me over, and I think it's great to share the forum with all of you and share my thoughts. So, to Puneet, to your question, I think COVID. I think for the last 9 months, 9.5 months since the time the lockdown really began, I think for us the going has been brilliant, and I take pride in the fact that as an organization, Max Life has been one of the top insurers which have been growing on a YOY basis. And the channel that I head, which is the partnership with Axis Bank, it's been a brilliant growth story for us with a YOY growth of about 30%. You know what? I think somewhere when COVID came up, and I use this very often, that COVID is an acronym for myself and for my distribution team that I use, is actually that COVID is an acronym for actually creating convenience in digital. So it's the way you look at it. I think somewhere we were very confident when we said that, let's turn this adversity into an opportunity. And that's how, the moment you change that mindset, I think everything else was there. Let's look at very simplistic things. Uh, if you ask an insurance salesperson, what does he really need? He just needs, of course, customer needs to have the money. He needs to have the time and patience to hear you out. And of course, he needs to have the need for insurance. I can tell you very clearly that post-COVID era, the need for insurance products has only compounded. It couldn't have got better. I mean, there has been no time in my last 20 years of career in insurance when customers have reached out to me themselves, and saying we need insurance. This has been that time. So clearly there was a latent need which got created given the fact of the pandemic and the fear and the anxiety around it. The second element was that customers had the time availability, they were at home. The only thing that had to be solved was to how to connect to them, how to create a seamless, technology-driven, digitized, simplistic process, and of course, create that connect and trust with the customer over a digital platform. And I think that's a journey that all of us have covered over these last. And so I think it's been a brilliant going. And now with the opening up, I mean, with the vaccine around the corner, I think it looks very, very optimistic. Of course, I would not deny the fact that there has been economic impact of the pandemic across the globe, which is bound to impact for some more time. And there are, of course, related elements within the industry and within the value chain which will get impacted. But overall, if you ask me, I think COVID has only brought to forefront an advantage for the insurance industry. Specifically the need of saving, the need of protecting, and need for protecting your life as well as your assets for a long-term perspective. So I think it's actually been a boon in some sense for the industry for sure.
Thank you, Amrish. I would request all the panelists to please introduce yourself while I put across questions to you. It will be a sort of a self-introduction. So over to Kamlesh. Kamlesh, what has basically, the supply chain disruptions, or you can say the income from the various industries when we talk about today, in terms of entertainment sectors, hospitality sectors, or, the productivity point of view, how has the sectors which has crippled in economic situations and brought about certain changes towards your organization, and what are the repercussions that you must have faced, or you still feel, or you anticipate there might be some repercussions which might erupt in the near future post-pandemic era?
Hi, good evening, and thank you, Puneet, for addressing this question. So good evening to all the viewers. I understand there are 100+ people watching us live here. Uh, Firstly, to introduce myself, I am Kamlesh Manuja. I head the business operations and customer service at Edelweiss Tokyo. And yes, Puneet, I think you're right in addressing, saying that COVID has actually created a lot amount of disruption, not only to insurance, the entire BFSI sector as per se. And the disruption is on the operational side, financial side, and also on the human capital. Uh, to name the industries which you talked about, like travel, hospitality, to an insurance also, the two peak months, largely on the life insurance, because COVID struck us somewhere around on 21st or 22nd of March. The peak part of the business, almost, in fact, if you look at PwC result, it actually talks about 30% reduction in insurance volume because of COVID. And also April is one of the bigger months for all the non-life companies, purely for the credit business or the group business renewals which comes in those particular period. In fact, the entire sector has registered a degrowth following COVID. And to an extent, what my colleague Amrish was talking about, and I too firmly believe every crisis is also on the other side an opportunity to be viewed in that particular manner. Is while there is a disruption, there is a fear which ran in people's mind. There are sectors which almost got into a pause mode. It actually created a new opportunities of knowing oneself, assessing one own self, and also more importantly, questioning, saying that, am I well prepared to handle this particular crisis? And that's where insurance, or so to call protection, plays a very, very important role. Where all of us believe that, this illness may not come to me, it will come to somebody else. But COVID is something which it share its span, which still it is running in people's mind, and the fear, because everybody has seen some near or dear one suffering from that particular ailment. So essentially, what we've seen is the need, the appreciation for insurance protection, be it on the life insurance part, on the term products, be it on the health side, onto the Mediclaim part, is gone up exponentially. The second part, I just wanted to talk about two more perspectives, which and how it has actually impacted the economy. Because initially we've seen, because of the lockdown, lot amount of jobs which have got impacted. This has actually created a vicious cycle for the entire BFSI, because the job loss resulted into insecurity, resulted into not wanting to invest. The EMIs or the loan repayments got into a particular cyclic nature. As a result, the entire stress which is gone in the entire ecosystem, and which impacted the entire credit line, as well as, for the matter of the cycle of lending to the tier 2, tier 3 city, which has resulted into demolishing of the GDP and other particular part. Lastly, the last segment which I want to touch upon is, we've kind of understated or underrated the entire cyber security or the cyber crime part of the things, because that's one area, because people have shifted their offices at home. That's the new impact which is kind of created following COVID. And where some amount of work in that particular space has to be done. So, long answer to the short question, Puneet. If I miss something, please add it.
Definitely, I'll come back to you. I'll love to hear more, views from you. So coming to Shweta, I just wanted to know about the challenges that, basically we are faced from BSI enterprise across the value chain segments, with regard to the growing competition, a cultural shift, regulatory compliances, and, Kisan, that the rising expectations. How do you say that, like, post-COVID or this COVID, how the entire ecosystem has been able to, get its drivers, or it is, you can say, both the organizations or probably the ecosystem are getting geared to it, evolvement of the same. So, any comments from you on that?
Thank you so much. First of all, I would like to thank the Eden Global team for inviting me on the panel with esteemed panelists like you all. I am Shweta Srivastava, and I head IT for Paul Merchants Group Company. Paul Merton's group has been into the field of remittances for the past 20-25 years, and we are actively involved with the business of foreign exchange, travel, and we are also an NBFC, so under which we are involved in gold loan and personal loans and insurance being one of the business, and we have PPI license, so we are issuing prepaid instruments to our customers. Talking about challenges, of course, Puneet, all of us have witnessed the impact of COVID-19 in past few months, and the economic slowdown we've experienced. Now that it is on a rising trend, however, it will take some time to get back to what it was in the pre-COVID era. Specific to the challenges that the BFSI industry has faced is, of course, number one is the connect with the customers. It was very challenging to connect to our customers and assure them that the services will be provided to you in a contactless manner, irrespective of the fact that we all were had shifted our base to our residences and we were working out of our homes. Still, it was very, very important to have the customer trust intact. From the regulatory side, yes, there were a lot of challenges in terms of compliances, in terms of, because regulators were very, very clear on their priorities, which was, more customer centric. So the regulators wanted to make sure that the customer interest is followed, no sort of penalties should be applied in terms of the lending interest, even if it was not paid on time. So all of those adjustments we had to make in the system because there was no provision earlier. So straight through process was that if somebody, skips the repayment cycle, he is supposed to be penalized. But in this case, we had to make all those provisions. So this was, of course, one of the challenges which was unforeseen initially. Then our customer care centers, which were on-prem initially for the companies who had not explored a cloud telephony sort of a system, they were all standstill. Customers did not know how to reach out to us, and we did not know how to connect to our customers. So this was one of the biggest challenges. Last but not the least, the cyber security part of it. So when there was no, the organization, especially the, conventional way of working for companies like us who are mainly working out of the retail offices, we never had a work from home culture. So for shifting to our home and still ensuring the business continuity, it was a little challenging initially, but thankfully, because we had our server bases on the cloud, we could manage that in minimal possible time. So yeah.
Thank you, Shweta. So now on down to you. Basically, with the same challenges, which probably from technology aspect, which Shweta has just pointed out post-pandemic, and the impact that probably they were not able to reach out to the customers and customers were not able to reach out to them. So I would like to know from your perspective, where exactly the challenges were faced with regard to customer, you can say relaxed retention in terms of customers, in basically security breaches, outdated mobile experiences, right? And what was the need of the hour, what was the experience, and what were the challenges that you were facing, and what initial decisions, smart decisions you took during this time to address your customer needs. Over to you. Hi Raj, were you able to understand my question?
Yeah, just repeat the question, Puneet.
Okay.
Thanks, Adam, for giving me an opportunity. There's some network issues.
I have just framed my question, so probably could be in different manner. So I said with regard to challenge. So with regard to challenges, which I said technical point of view, where the customer is forming a main base, or internal there are challenges from the technology perspective to reach out to your end customers, probably what Shweta just pointed out. So I said in terms of pandemic, during pandemic times and lockdown times, what challenges your organization faced in terms of for retaining the customers, relaxed retention in terms of, certain, you can say outdated mobile experiences, the old mobile experiences would be there. And what smarter decisions or a quick decisions would you have taken, where you said that, like, competition is very much in place, like, sometimes I cannot afford to get, lose out my customer. So what kind of certain areas where you had a major focus and, they were quick decisions which really were able to address those challenges?
Thanks, Adam Global, for giving us an opportunity to be a part of the STEAM panelist. Thanks, Puneet, for framing the question for me. There are some network issues, I suppose, one has to be right now. These are one of the challenges that we face across right now. Talking about the issues that we faced during pandemic, one was there are operational challenges as well as the technical part. uh, Talking about general insurance, we have come up from a very traditional approach where we have proposal forms, we have claim forms, we have set of documents. All things are required to process certain policy or for claims. So these are the basic hygiene practices that we have across the industry. And now when we are not meeting customers altogether and there's no physical meeting, so the chances of collection of documents becomes very difficult part, and to understand the documents on a scan mode is also very difficult. So to handle those parts, we have come up with certain criteria where we have designed certain pages for customers where he can fill up those details, and those details can be auto validated in system, and which can be accepted as wet signatures from customers and taken as a proposal form. So these are the practices that we adopted so that we can have a seamless initial process to issue the policy front end itself. And second part was with respect to claims. Again, uh, when we talk about claims, there has to be talking about motor damage. Right now, there has to be physical damage to the vehicle itself to get the claim. Now that is being in the industry. There has to be a surveyor appointed. The person has to visit the vehicle. He has to take the photographs, and then he has to come back to us. We came up with a solution. Let's When a claim is intimated to our customer service, we'll send a bitly link to the customers. Through bitly link, the customers can have a self inspection of the vehicle, and that self inspection is also being mounted at our central level, so that we can estimate what is the exact damage. And that damage can be we can have a settlement basis cashless where we have tabs, and those things can be solved out at customers, so that the grievance part of policy issuance or claim part can be easily managed altogether.
Thank you, Raj, for that.
Yeah.
Yeah. So rounding off to Kamlesh again. So Kamlesh, I just wanted to know, see, the need of the hour was like, everybody is in, confined to their flexibility of working from anywhere was something which is, the pandemic has taught us, like, especially for the India subcontinent, like where, everybody, especially the BFSI sectors as regards to NBFCs or insurance domains, we did not have the culture of working from home, right? So one is the culture, one is the adaptation. So under such circumstances, from the business perspective, how do you think the increased fintech competition that is evolving, right? And then probably the purposeful digital transformation and tackling the current and the evolving regulation all confined into one. How are these areas were being addressed by you and your peers while the work from home culture was adapted to reach out the business or the revenue to work out on in parallel in conjunction to all these areas? It was a 360-degree quick response cell being formed, whether it is IRD or a banking or anything. So
Yeah. So I think, Puneet, the last part you went on mute, I guess, because of the technology lag. But having said that, to answer the long question is to state upfront, I think necessity is the mother of invention. So COVID put us all at our homes, forcefully, kind of created our offices from our residence. And, you know, so if I were to put it, two examples I would probably want to quote to my colleagues here, and probably they can add. Insurance as a business is highly emotional and people driven sale. You would want to meet an agent face to face, or at least you would want to have a feel of that paper or the brochure which the agent or the seller provides it to you, because you can't see insurance money upfront, but it's a guarantee for a long term. So एक paper देखना बहुत important है, the brochure, the logo, the agent who's actually kind of selling it to you. It's a trust factor which comes in. One of the change management which was a big challenge which came at for us, in fact, because it struck in the month of March and April, our business actually came down by 50%. In fact, our productivity sharply dropped because the new normal takes some time for people to get adjusted to it. And as a result, because our agents, our field force largely is used to face selling, is had to adopt to the new normal of the digitization. One of the initiatives with at Edelweiss Life we introduced was a digital advisory platform, which is not only right from understanding the customer need, planning a particular solution, and also making sure you ensure the customer onboarded onto a digital platform and do the entire fulfillment thereof. So, I'm pleased to inform that the whole, value chain, right from the time of making the product explained to the customer while using WhatsApp as a medium, video calling as a medium, creating digital, brochures in terms of sending emails in form of WhatsApp, as well as, to the customer on their registered ID. There's a big amount of shift which we actually have seen. In fact, what we have seen is, be it our customers as well as our agents have been a very, very strong and an early adopters of technology following COVID. And as a result, we've actually, the blessing in disguise is we actually created a new way of operating where our whole back office cost with respect to pen, paper, data entry is almost got eliminated. The second part, which we've seen a very, very big impact, following COVID on that particular bit, is essentially the whole piece from a customer perspective, where the entire servicing piece is also come online, where the customers are actually interacting with us onto the digital platform. We've, in fact, in the COVID period, the bigger challenge what we've seen is when we wanted to do a BCP and work from home, the laptops weren't available. And one of the solutions what we've actually created, and I'm sure all of us would relate to that particular bit, we take pride at Edelweiss Tokyo Life is we planned things from 15th March. In fact, the lockdown happened from 24th. We actually created a digital app, along with our vendor on that particular bit. And through that particular app, fortunately, we've eliminated the need for a laptop because everything was digitally connected onto the mobile phone, including connecting with the customers. There was a big challenge because there was insecurity in terms of people, whether they should keep the money in their bank or with them, or they should invest into insurance or pay the premium. Was a big, big challenge. And I'll tell you, the entire engagement digitally, creating digital advisory, educating the people that how a new normal has to be dealt with and adopted. I can tell you not only customers, our distributors, but overall population at the large embraced it quite well. So, so these are the learnings I probably want to share. And I can go on and on, Puneet, but I would probably want to.
Thank you for such a, earlier question you said, small question answered big, now big question answered small. Thank you for those insights. Very well answered. So coming to Amrish. Amrish, since you are from the technology side of it, so we'd like to understand what was the focus basically for emerging technologies to play during the days of pandemic. Was CX really a part of your digital innovations, because it is a continuous innovation or the evolvement during the pandemic times? One was on the one side was emerging technology, second was the faster go to market, the third was the hosting thing, the fourth comes as the customer experience or the end user experience overall. So how do you basically stitch all these four together and give a one product. If you have to say what will be the best that which really evolved better in your organization.
Sure. Thanks, Puneet. First and foremost, a small correction. I'm actually from the business who leverages technology. So it is
Wow.
actually panelists who've been the big backbone, I think, the operations and the technology, which have played a crucial, critical role in delivery of business, the channel that I run. So I'll quickly do an introduction for the benefit of everybody. I work with Max Life Insurance, and I head the distribution of the Axis Bank and the Max Life partnership. So for me, but I would still try to answer this question that you mentioned, because very critical. Of course, having the loss in March, which I think Kamlesh was alluding to, because of all of us pretty much banking at about 30-35% of our sales coming up in March, we did lose out, and hence it was very critical to really bounce back together. And I fundamentally believe that, come customer backwards, come distributor backwards, and that's how you should leverage technology. Today, with the beauty and the technology expertise available across the industry as well as in-house, I'm a firm believer that whatever the mind can conceive, the technology can create, is something that I really relate to. So to answer your question, did we have to do a lot of stuff on customer experience? You're right, and I will talk about it. Did we have to change the mindset of distribution? Because I run a distribution of almost about 4,000 people and about 25,000 on the other side of the bank. Changing mindset across from 25-30,000 people who've continuously, consistently believed that insurance is a face-to-face product, for them to really start adapting to the fact that a customer can be sold remotely, and a Zoom or a MS Team kind of a format can be actually used to fix a meeting. It took a little while. It took a lot of training effort and so on and so forth. But I think the beauty was at every stage. So first and foremost was to align the mindset of the entire distribution team through training interventions, through digital, of course, interactions with the sellers. Second is to create a conviction that, given the uncertainty, clearly Google searches were alluding to the fact that protection as a category, as a search word, had gone up significantly during those times. And hence there was a clear opportunity on two things as a product category, and especially I'm referring to life insurance right now, which was protection and long-term guarantees. So we leveraged that opportunity from a product positioning. So one, we had to change mindsets about people believing that customers are ready to accept if they were to talk to them. Second was to coach them on spoken to the customer in terms of the product categories. And third was enabling the journey, which is what is critical, and which is what you were mentioning about the customer experience. So pre-pandemic, we of course had a I would not say 100% paperless journey, but then we were able to come to a complete paperless journey. There was a CDF that we used to get signed a declaration form, which we got waived off. Second critical leg of this whole process of life insurance is the underwriting leg. And that's when we came out with something called as video MER. For so many years, I wonder why we did not ever do it. That's what I think I would say what Kamlesh said. I think necessity is the mother of invention, and that's what happened. So far, we started this MER, which was a simple medical examination by the underwriter, by a doctor with the customer. But video MER actually made it very, very simple. Payment gateways anyways were existing, and hence sending out a link, taking the KYC on an email and a scan, as well as using the eNACH for for further enrollment of ECS. I think all of that. So we created a completely 360-degree journey of what we call as home-to-home sales. So from a face-to-face sales model, we moved to something called as H2H model, which is the home-to-home sales model. And so of course, the key factor was to make sure the customer experience is very, very seamless, simple, and transparent, giving him the confidence. And of course, from a distribution perspective, it was equally critical to make sure that there is a choreography created to make the entire distribution chain functioning in a certain manner. And for that also, by the way, there were a lot of digitalization done. So today, so we started with something as I would say layman as Google Forms, as to have you touched base with 5 customers today? Have you touched base with every banker today? Have you touched base with all your renewal customers today? So it was a choreography that you had to create and say, because one of the reasons, and especially as I think Shweta was mentioning, since none of us were culturally aligned to working from home, and especially the insurance distribution teams, uh, it can go all over. I mean, people could possibly presume for a long time that this is a paid holiday which had started. So to really get people into action, it required a certain amount of sales management, certain amount of choreography to be set in, certain amount of digital tools to register and record your activities through the day, and make sure that everything is functioning in a normal BAU manner as it would have functioned in the office. So that's something that I try to work upon within my organization, within the support of all the technology and the operations folks and the underwriting folks who actually got relaxed guidelines to support our business, and of course the bank which supported us significantly in terms of adoption of the technology. And the result was that come April, May, we were almost at 90% H2H sales out of our large volumes that we were doing. So we were able to sell digitally and give the customer that convenience and that comfort. And eventually, of course, now it's become a BAU stuff. And of course, but the beauty is that it is only helping us evolve with every process. So I believe that, if you come customer backwards, there is an opportunity in every process to simplify, to ease out, and create that customer experience overall. So that's my few thoughts, Puneet.
Thank you. Thank you. Very nicely, written and spoken about. That's like very well articulated as well. So, Shweta, my question to you would be though, flexibility is the key to competitiveness, what we can say that. So, the art of competitiveness, one has to be ready. This is what pandemic has really taught us, right? And the transformability enables market-driven responses, definitely. So, in your value creation, I need to understand how did you leverage technology for the value creation in the the hyper connected world, in terms of all those people say we are connected, and so how did the 360-degree ecosystem got built, or it's got evolved, or you still say it's getting evolved?
So, like Amrish said, that this was a good time for technology. So, interestingly, every organization did have a digital roadmap, digital transformation roadmap. But some sort of acceleration happened in this time when COVID happened, and then people realized that it is now difficult unless you explore digital channels. So for us also, it was some sort of an acceleration that happened, and the focus of management was more into exploring the different channels through which we could reach out to our customers and to explore new opportunities with the help of technology. So which went in our favor, and we did have the roadmap, like I said, for different verticals of Paul merchants. We interestingly, I would like to mention here that all the verticals are undergoing a major technology transformation. So we were working on, legacy technology platforms, and some sort of desktop-based applications are also running at this point. But good part is that we are working towards complete renovation and transformation of technologies, and we are exploring the new technologies in terms of, AI, ML, and we are transforming our way of connecting to customers through e-commerce platforms, and mobility is something that we are exploring in a very aggressive manner. For lending, we've created a digital lending platform where the customer can onboard himself and undergo the entire credit underwriting through the digital channel itself, and there's no manual intervention or manual assessment that's happening till the dispersal happens. So, like Amrish mentioned, that we are also utilizing eNash for the mode of ECS enrollment, and we are utilizing video KYC services for performing the KYC of our customers, which will help us in contactless risk assessment and fraud management point of the things. And for customer care also, we've moved to a cloud telephony platform, and now 24 by 7 operations can be ensured in terms of customer grievance and support. So these are the different technologies that we was sort of fortunate to explore during this time, and more or less they have been in action. We have got them deployed, and our customers are already exploring these ways of connecting with us. And there are certain which are already in the roadmap, and very soon we will be completely digital for all of our business verticals.
Thank you, Shweta. Yeah, so over to Raj. Raj, I just wanted to know basically during this pandemic times, uh, creating actionable insight by running, the core analytics piece, which has evolved over the times, which based on the customer runs its own customizations, behaved on the behavioral patterns of the people. You run on your own predictabilities and have smarter decision engines and run your core analytics on top of that. So in creating actionable insight, where is the value lies in a hyper-connected technologies, or to enable that move from hunch to insight? What has added value to your organization?
See, when I talk about what do you call it, using technology for hyper, what do you call it, hyper connectedly world. Uh, See, the three things mainly. One is your human force. It's exactly the employee that you have with you. Employee has the knowledge, power, everything, and these guys have to be retained in the organization. In terms of these guys provide you the quality knowledge that you have. Along with that, when a company has been for around 15 to 20 years in business, they have a huge big data with them, through which several other analytical part can be come across. Third part would be in terms of the entire system architect we are talking about. So these three combinations play a very important role. Talking about us in at Reliance itself, when we have a digital roadmap, I will say, and this got utilized in a much better way during pandemic. We have OTC platforms across. I suppose most companies have it. When talking about health insurance, we have if a particular age is there, the person takes the policy without it does not have any ailments. Like in health, also we have a particular age, the person takes the policy seamlessly on platform. When the person declares some ailments or some sickness, then there is a medical test to it. Now when we have those knowledge with us, when a customer declares that he has some sort of illness, can we have a trigger in system which recognize what illness he has? Does that illness paramounts to medical test, or it can be a normal loading we can have and running parameter to it, and we can capture that in our system. So those big data that we have can be analyzed in a better way in system. Now uh, talking about if the base is 100% and the 50% is the STP. Now if the percentage is around 25%, which can be easily converted with the help of loading, that doesn't go to underwriting channel, and through OTC platform with having a normal loading to it, the policy gets converted in system itself. uh, this is mainly used as an RPA model, where we have AI as well as machine learning. So certain questions are being thrown at the customers, he respond to those questions, and that are being consumed in system itself. So it's a ongoing phenomena. So those technologies are there in our system. So these technologies help us, and this help us to get along very easily during the pandemic time, because we don't have that strength in our company that time. Most of the people were working from home, and systems are able to utilize and give that output to the customer itself. Having that loading factor, you issue the policy.
Thank you, Raj. Coming back to you, Kamlesh. Uh, my question to you from now is the old school of thought, talking about. So when we talk about hyper connected business, which Raj and Shweta just pointed out from technology angle, I will run it down through the business side of it. In terms of hyper connected business, it challenges the old business playbooks. and shapes the competition in a way that challenges the industrial forms of organizations. I would like to have your views first on the same, and then Amrish can have a value addition to it.
Sure.
Your thoughts, please.
So, yeah. So I think, one of the things, Puneet, a little digression to your question, I think we missed out in the conversation. While COVID has striked us, lot amount of us have realized opportunity as well as certain amount of pains what we are going through. Hyperconnectivity, if you have to achieve, technology plays a very, very supreme role. In fact, it is redefining the way we are running the organization. In fact, lot amount of CEOs, promoters have also kind of thought through saying that, do we really need swanky offices? Do we really need all the functions to come office every day? Even if vaccine has to come, everybody has to be immune with COVID. Do we actually see 100% of our staff coming to normal? So, same as, what Amrish talked about home to home. We've actually kind of pre-COVID were talking about branch in a box, where you do everything either through your mobile app or for that matter through your laptop. But one thing, a digression, Puneet, I want to do it is, in fact, in the COVID bit, to an extent, some of us have talked about with Shweta, Raj or Amnish, is the role of regulator in enabling the entire hyper connectivity is, while we talked about end-to-end digital enablement, trust me, if those initiatives the regulator would not have taken up or would not have collaborated with different stakeholders in the ecosystem, be it in terms of with NPCI, be it with respect to, UIDI, be it with respect to the regulator from insurance or probably SEBI to an extent, the entire value chain, what is looking to be very simple, doable and changing the entire arc. A previous forum on the panel, we are talking about WhatsApp. Now the bank may change and come to a WhatsApp or to a Paytm or for that matter to a Geo. This transformation would not have been possible without having our ability to connect every dot in the ecosystem and give a visibility and an insta outcome, which I would say in form of decision, in terms of requirement, or in terms of a processing of a particular claim. So, I would rather say that regulator has actually played an enabler and acted in a very swift manner to bring decisions at the doorstep of insurance companies so that the entire benefit can be passed to the customer. So, this is a part I just want to say it. Hyperconnectivity, what we are seeing is beginning. The entire rules of the games are going to be get redefined. What we were actually seeming to be impossible, be it on the distribution, be it on execution part, I think it's going to become a new future or a new normal for us.
So do you think it's an opportunity or it's a threat for the, day-to-day evolvement about as an acceptance it comes and gets embedded into your day-to-day lives?
Yeah. So Puneet, I would rather say it depends upon the beauty lies in the eyes of the beholder. So it depends upon, what strategy you would want, what target segment you would want to, operate within it, and what, deployment from a technology perspective you'll do it. We've seen wonderful deployment, wonderful technology, but poor execution. It actually works out to be a threat because you don't end up making money, and profitability is the key when you try and kind of do a hyper connectivity across ecosystems. So I would rather say that at this stage, we've seen technology doing wonders. We've seen adaptation with millennials. We've seen Gen Z. We've also seen Zen Alpha, where people are kind of thinking long term and people wanting to invest on their particular bit. So I would rather say that, one should give a long shot and kind of operate onto an enabler. So I would see it as an opportunity, Puneet.
Thank you, Kamlesh. I would like to have opinion of Amrish as well now. So numero one is what? So this would like to answer that.
Sorry, so I'm just picking up on the last question that you were talking to Kamlesh, Puneet. So I just thought I wanted to touch upon a few things on the hyper connectivity as well as as you said, advantages, disadvantages, whether do you see a threat and opportunity. So I just wanted to actually talk a few examples which have really, really worked very well. And I think Raj was talking about it. Example, I mean, the big data, while it's available with everybody, it's also available with certain specific institutions. And I think the CIBIL check, while so far it was construed to be just a lending, know-how platform for the lending firms and the NBFCs and the banks. Today, it is becoming an equally powerful, and I'm not referring to only CIBIL, I'm talking about any similar organization per se, where that data is so rich enough for now, even the underwriting on the insurance side. And that is the advantage of big data available at various places, where it can really help us create convenience in the customer life. That is something that I've kind of seen, witnessed, and I think it does a wonderful job for the insurance business per se. The second thing is that this whole hyper connectivity has led to a lot of transaction led opportunities. And let me elaborate upon that, because in my previous role at the bank where I was heading the insurance business, that's something that I was very passionate about, which is I would say transaction-led insurance, and that's something which I think the general insurers have played out very well. Today, when we look out in the market, I think the travel insurance is completely now a transaction-led product rather than other normal product. And I think the other products like jewelry insurance or I would say a home insurance or are actually becoming like another, or mobile insurance for that matter, is the best easy example. And that's what I was telling in a bank, that today, you know, uh, banks and I would say other financial institutions are sitting on so much of real-time transactional data. So if you can actually create some bit of hyper personalization for the client and integrate that together with the transaction and create an experience, there is clearly a distribution opportunity available. Now, let me also give the advantage and the disadvantage as you talking about it. That does this create an opportunity or a threat? So I was talking so far about an opportunity, but threat, let me tell you clearly, I think the entire ecosystem of conventional insurers and conventional banks is under threat by fintechs and by insurtechs and by e-commerce firms as well. So as somebody says that the camera industry vanished by the mobile phone coming up, I think that can very well happen to the insurance industry as well, clearly, because it would not be time where the e-commerce industry or the transactional platforms for the consumers are able to offer, and that will be the regulatory purview. If you ask me, if the regulator really opens up tomorrow and makes it very simplistic in terms of the entry barriers, some of these easy products and some of these attachment products are going to see a huge jump. And I think there's going to be a lot of use of big data, a lot of use of hyper personalization, customization, and an ability for a consumer to really make and choose his pick. And that's why I'm saying clearly, I think it's a global battlefield that is really coming up for all of us with the hyper connectivity. So I think these are some opportunities I wanted to touch upon. But now coming back to, if you could sorry, repeat the last question that you raised to me, Puneet.
So I was just saying, as I just wanted to have some comment, opinion about you, the question that I put to Kamlesh as well, and you can also put your opinion about it. So very well said. You've already given some thoughts to it. So I said that the threat or opportunity, what will be the numero one? So one has to decide about it. So I think so that is too early to predict on it.
Too early to predict, but
yeah,
I think
it's too early to predict, but I think so entire journeys are unpredictable and we are gearing up as we are evolving. That's what we feel.
I keep referring back to fundamentals. Agility and coming customer backwards is what will differentiate the people who will either treat it as a threat or as an opportunity. If we evolve, we will see it as an opportunity. If we don't, then there are certainly many global thinkers right now thinking about creating that ease and transparency and convenience for the customer. And at the end of the day, customer has to be at the epicenter, and technology has to evolve around it.
Right. Thank you, Amrish. So moving on to Raj again. Raj, I would like to ask you, since this is the on the technical side of it, that we are the era of API services, the plug and play and yes. The component based approach. So that is something when the organizations has really a pandemic has been a time where it's not that now when the pandemic came and organizations started getting geared up for their digital journeys. Digital journeys were almost an evolvement a decade almost back, right? It's that if people are not, the sooner you're not taking that stand, then you lose the show. So everybody has to be cutting edge today. So necessarily is not that even if one person is or one organization is adapting a technology and we also should follow the world, that also does not happen, because every person or every organization has their own way of running the domains or running their own ecosystems. They have their own predefined set of procedures and policies under which the ecosystem runs, whether it is people, process, technology, or data. All these converged into 4 runs on the things. So I would have a question for you. What was the API or API led strategy which probably helped your organization in building the digital strategy as a plugin and faster go to market?
See, we have seen that web aggregators are an emerging piece right now, and they are holding a very chunk of business currently. In terms of distribution, they have a better reach. They have got several POSPs and other distribution partners with them, and they are continuous enrolling it. And they have gotten backup of P investors too currently. So what we see is currently in terms of API, see, we were working on the API model, and currently we are working on some traditional products also. We have motor, we have health. These products very easily sell through on the API model right now. And currently we are working on uh, commercial products currently, which are more of a technical nature. So that, as earlier said, RPA model and other AI modeling are being used right now. So as to extract the data from our side itself, and we can have a easier, convenient way to guide our partners on the API piece.
Okay, thanks. Shweta, your views on this?
So I would say, Puneet, we are more on the receiving side of it. We are consuming a lot of APIs from aggregators, from regulators also. So recently, we've added our portfolio with a couple of products from NPCI, which involves a RuPay card with our PPI license, and then we've added FastTag. So these are all the APIs that we are consuming from the regulators, and then we are enabling our platform to be able to offer all those products. Similarly, when I mentioned video KYC, it's an API that we've taken from a third-party service provider, but that's enabling us to be able to perform the KYC of my customers through a contactless journey. So we are basically at the receiving end. Like I said, we are consuming a lot of APIs to enable our platform to be able to offer a host of services from different service providers, insurance being also one of them.
Thank you, Shweta. So I think so we are left with very less time. So this is the final round in which I would like to ask that, one liner where I would like to have from all my co-panelists, one liner with a very smart, tagline. What, this pandemic has really taught us, and how are we getting geared up for that? Over to you, Amrish.
That's a difficult one to think of a one-liner, but I would probably use the one that I used at the beginning. So let's call COVID as creating convenience in digital.
Very well said. Okay, thank you. Yes, Kamlesh.
Yeah, Puneet, I would rather say a message or learning. I think COVID has taught us that one needs to be prepared, invest in business continuity plans, smart risk management strategies, and create a very strong or resilient workplace cultures to deal with any contingencies.
Will workplace really exist? That is also a question.
Yeah, the work gets shifted to home, so then it exists. So,
Kamlesh, thank you so much.
Puneet, we lost you. You've gone into a freeze.
Yeah.
So I said, Raj, over to you now. One tagline or one liner from you.
It won't be a tagline. I suppose with COVID, one has to work from home for a long time, I suppose. It has, I suppose, yes, it has to be a long time, I suppose, as per the numbers that I have with me and the vaccinations that we are in place right now. So work from home is a new normal. I will continue with that same tagline right now.
Okay, thank you, Raj. Over to you, Shweta.
I would say digital is the way forward. Let's use it as an opportunity and connect with our customers in a more efficient manner.
So before the pandemic, I had one tagline where I used to say, whenever I started any digital journeys, it's like feel, challenge, change the culture. So the culture has already been set in. So there is new tagline that needs to be formed now. So thank you very much for all the my co-panelists, and it was really a very well opinionated, and I really welcome everybody's views on it. And COVID-19, the impact in as a summarization, I can say that COVID-19 on the BFSI has led to a growth in terms of the decreased productivity, and lockdowns have really started to take a toll on the financials of the corporate sector. Supply chain disruptions, manufacturing hindrances, crippled health systems, and they need a hefty public fund stimulus to continue operations smoothly. For this, digitization and innovations has played a very big role. And not only that, the income from tourism, entertainment sectors, or among many other already crippled economic situations, factors like these are all adding to the strains of the global economy and the repercussions that one would have not even thought through. So, and this, the problems which were one was already thinking, the solutions are faster than the problems now. So that is what COVID-19 has taught us: the strategy of digital, the strategy of working from anywhere, the strategy to the neo normal, the strategy of substituting physical touch with a virtual touch, right? And a personalization which is called the web personalization 5.0, talking about the digital journeys, personas of customers, 360-degree ecosystem, whether it is employees, partners, your vendors, or you talk about your customers, all are coming in one ecosystem. So all these things COVID-19 has really taught to evolve, and it is leading to normalcy now. With that, I would say thanks to Adden Global to giving us this opportunity to share this platform. Thanks a lot.
Puneet, there are some questions from audience also. So, Mr. Ravish Bhatnagar, he's asking how is industry changing with so many digital insurance aggregators?
Okay. Who will like to take over to you, Kamlesh? Would you like
Yeah,
to take this up?
so I'll take that, Puneet. Thank you. So industry is indeed changing. I think the market is becoming more stiffer from a competition perspective, but it is actually kind of giving or getting a new dimension because there are new innovations which are happening in the market. So, example, pre-COVID, we haven't thought about getting into a disease management space or into a preventive space, but we've actually kind of launched COVID Shield. So that's one innovation, which has happened in the life insurance. We've seen lot amount of aggregators have come out, with different part of product solutions or attachments in a form of riders to the protection bit. So, we would expect more innovations happening, more competitions coming, onwards. And, that should drive a very positive consumer outcomes, I would rather say, and create more transparency in the solutions what the insurance and the customers are going to get.
Thank you, Kamlesh. Yes, Namrata, any other questions?
Yes, there is two more questions. First is from
Yeah.
Satyanandan. He's asking, are you leveraging blockchain or technology to reduce the risk of fraud in insurance?
Yeah. Anybody would like to take that? Amrish or Raj?
Well, we are using such technologies to detect a fraud in system where we have customer database with us and looking at number of claims and other stuff and what are other details that we have based on RTO or location wise. We are able to detect such frauds in system right now.
So, Puneet, if I may add and give an answer to the person, there is an initiative from the regulatory subcommittee end onto the blockchain where all the insurance companies, at least on the life part, I also know a similar committee was set at the GI end to kind of collaborate and share the fraud data to kind of, in a consolidated manner, launch action. However, the progress is being quite slow on that particular part, while insurance companies have decided that they'll come together. But I see that particular part happening informally. Also on a formal arrangement, there is called as insurance, IIB, which is Insurance Industry Bureau, where a lot amount of information formally is being shared by all insurance company, and people are taking use and advantage of it. So to an extent, it is happening, not in a complete blockchain per se, but yes, the initiative from the regulatory subcommittee is happening.
So that means the consolidation is still yet to come.
Yeah.
Right. Yes, Namrita, the third question. Anybody would like to add on to the previous question? Your views, Amrish?
So Puneet, it was blockchain and what? Which was the second?
It was blockchain for fraud detection. What else was there? Can you repeat the question, Namrita, please?
Are you leveraging blockchain or technology to reduce the risk of fraud in insurance?
Blockchain
Yeah, so it's
and
blockchain.
technology.
Yeah.
Okay.
So I answered that. So yeah.
Yes. Amrish, your views on this?
No, I think I would take it from the other second part. So I think blockchain, both Raj and Kamlesh have already mentioned that how can they use, but I think we started using something called as video in one of my assignments earlier, because a lot of frauds in the life insurance are basically around it could be around 2-3 things. One, of course, customer being not of the right health, or he could or there could be a seller fraud as well. To kind of curb all of that, we started doing something called as video proposal stage calling, where we had a customer to record a full-fledged message to say that he's understood the product and he understands that he's going to pay for a certain period and he understands the terms and conditions. So that kind of protected on both sides. One, of course, for the company to really absorb a risk and be able to look at the customer and have that recording, as well as also from a seller perspective to curb complaints of mis-selling at a later stage and protect the institution. So that's how we've leveraged technology very clearly, and there are enough and more examples of technologies evolving to protect fraud, and I think Raj spoke about them. So I mean, with telematics coming in now, there is so much of data available to kind of almost customize the proposition for the customer. So be it telematics, be it the value add services that the health insurers have started. We've launched a mobile app to kind of encourage the customer to really create a fitness lifestyle. But idea somewhere is also to kind of have a clear data around the customer to be underwriting the right kind of risk.
Thank you, Amrish. What's the next question, Amrita?
The next question is, what is the future of macro insurance in India?
Would you like to take it up, Shweta or Kamlesh? More from
So as we all know, insurance is hugely underpenetrated in the country, and even post-COVID, where all of us at the panel level talked about appreciation on protection, more health insurance, more fear in the minds of people and want to be covered. In the urban part, we've only covered 14% of population. Imagine in the rural, even the coverage will be far, far lesser on that particular bit. So yes, there is a huge opportunity on the micro insurance space, because there are a lot amount of self-help groups, lot amount of affinity groups where the level of coverage is still not there, or even if it is there, is very, very limited on that particular bit. And plus, on the top of it, the need for insurance itself can't be undermined to that extent. So I would rather say that there is still a long work and long expansion from an insurance perspective have to happen, and a lot of innovation on that particular bit, including the entire distribution and operational process, which has to be thought through in a encompassed manner to make it big.
Thank you.
Add on to Kamlesh, I think I would certainly say micro insurance continues to be a huge opportunity, given that it's technically livelihood insurance is the way I would call it, because pretty much I think for that segment of or strata of society, insurance is actually a desperate need. And I think the government initiatives, I must compliment that. I think the PMJDY and the other schemes which came out truly started addressing that segment. And I think PMJJBY, PMJDY, I think all those schemes have already made a start, and that has created an awareness in the system. Today, I understand the distribution challenges and the underwriting challenges, but I think with the NBFCs and other distribution channels, which is doing a lot of micro lending. I think at least a group credit life kind of a product, which is prevalent in the industry, is certainly able to impact that part end of micro insurance. And it is only going to get better and better as time kind of gets ahead.
So Namrata, are we done with the questions? Do we have time?
Yes, Puneet, all the questions have been done.
Okay. Thank you. With that, I thank all my co-panelists and my viewers who've been a very strong audience listening to all of us. Thank you, everybody. Thanks. And have a
Thank you so much.
ahead.
Thanks,
Thank
Amrish.
you.
Thanks,
Thank you
Puneet.
so much, Puneet. Thanks,
Thanks,
everyone.
Thank you.
Thank
Thanks,
you.
everyone.
Thanks.
Thank you to all the leaders for adding the value to this forum. Now, the most awaited moment of the evening has come to an end, a precious moment to celebrate success and innovation. Inflection Awards are the India's most prestigious awards in BFSI, technology, supply chain, logistics, marketing, and finance, endorsed by NASSCOM COE and co-organized by Alden Global Value Advisors. 400 plus attendees are watching live on our website. So, now we are starting the award nomination ceremony. For the first award for Best Innovation in Marketing Technology Insurance 2020 goes to Universal Sompo General Life Insurance. I request Ms. Puneet to speak few words on it.
Yeah, thank you, Eden Global, for that recognition. So, Universal Sompo's General Insurance Marketing Technology comes out the insurance wallet, which basically is known as the USGI Pulse, PULZ with it, which basically are giving value-added services, basically to not only to the policyholders but to the non-policy holders also as well, to have an Uberization in terms of using on-call doctors support in terms of nearby petrol pumps, call on mechanics. All these facilities are inbuilt for the non-policy holders, which are hooking them to the platform to utilize those services and get a feel of like how USGI can help them to leverage this technology. And this is from home to home. Thank you.
Congratulations, Puneet. Great show. Congratulations.
Thank you.
Thank you.
Congrats, Puneet.
Thank you. Thank you, Amish.
Next award for BFSI Excellence Technology Integrator of the Year Banking 2020 goes to DCB Bank. And I would like to call Mr. Prasanna to share his thoughts.
Namrata looks like he's not there.
Okay. The next award goes to Paul Merchants Limited for winning Best Innovation in Payment Technology Financial Services 2020. And here I call Ms. Shweta Srivastava to speak few words.
Hi, thank you so much for the award and recognition. The project that I had briefly mentioned here was about the B2B platform that we've made for a domestic money transfer. And this particular platform offers a universal platform where multiple services can be availed, and this is basically for my agent network and branches through which they are offering those services to the end customer. There are multiple APIs integrated. There are multiple third-party technologies like AI and ML integrated to make it more user-friendly and customer-centric. Thank you so much.
Congratulations, Shweta. This has been juried by the top finance leaders of India. So, very few awards have been given. We had, 50 plus nominations this time. So, congratulations.
Thank you. Thanks a lot. Thank you.
Congratulations, Shweta.
Thank you.
Next award for Best Process Innovation and Digitization in Insurance Distribution 2020 goes to Max Life Insurance. I would request Mr. Amrish to share his thoughts on this.
Thank you so much. Honestly, very, very honored and pleasantly surprised with this award. I think thank you so much to Alden Global and to all the jurists who made this choice. I think as I was talking in my previous panel discussion, clearly to make sure that a distribution team continues to run in a lockdown was the innovation. I mean, was the necessity which led to this innovation. So now, just to quickly tell you, this is a completely digitized sales management process where there is a structured engagement which can happen between in the bank assurance distribution channel, which is the large channel that I run along with Axis Bank. So we've completely digitized all our processes in terms of engagement at the distribution team with the branch manager, with the cluster head, with the zonal head, and at the branch level. And all of that can be digitally signed and agreed upon the actionables as well as to drive the respective metrics. So it's basically a completely digitized sales management process to make sure there is efficiency at every level and there is structured discussions across all the business metrics at every level to make sure that the business results are achieved. So that's what we worked upon with the help of my entire project management team, the business process management team, as well as the IT team. And that's what we ended up delivering, which is truly, I think, pretty much the first in the industry per se. So thank you so much for this award.
Congratulations, Amrish.
Yeah, great show, Amrish. Wonderful. Very few leaders are getting these awards. These have been juried by the best leaders again. So, not easy to get this one. Congratulations.
Thank you so much. Thank you so much. Really appreciate
Congratulations, Amrish. Good job.
Congrats, Amrish.
Thank you so much. Thanks. Thanks a lot.
The next award for Procurement Technology Solution of the Year 2020 goes to Maven Vista Technologies. And I would request Mr. Surit to speak few words on it.
Thank you, Alden Global and NASCOM, for recognizing our efforts and adjudging our solution Vendex as the best procurement technology solution of the year 2020. I'd also like to take this opportunity to thank all our customers who have guided us over the last 15 years to help us evolve Vendex into its current avatar. I'm also thankful to our highly committed and customer-focused team who have passionately worked to delight our customers across various industries like cement, steel, pharma, chemicals, BFSI, FMCG, textiles, and many others. And I'm very happy to say that some of the leading companies of these industries, Vendex has become the part of their procurement landscape. This endorsement has only strengthened our resolve to delight our customers consistently. And thank you all once again.
Congratulations, Surit. Great show. Wonderful, wonderful to have you on this platform. Congrats.
Thank you.
Congrats, Surit.
The next award for Finance Leader of the Year Auto Component 2020 goes to Vinod Bapna from Kaparo Maruti. And I would request Mr. Vinod to come and speak few words.
Hi, good evening. I am Vinod Bapna. I am CEO and CFO of Kaparo Maruti Limited. Basically, this company is a joint venture between the Kaparo Lord Swarajpal Group and the Maruti. And we are basically into the sheet metals, and we are manufacturing body parts of almost all the models of the Maruti. So what happened during this, after this COVID, when the production resumed, so there was a big pressure on us because the Maruti ramp up is very aggressively, and they start the production in the mid of June, and July onward, the ramp up is so aggressive that it's become very difficult and very challenging for us to supply the material on time, because Maruti is working on JIT just in time basis, zero defect, as well as the cash flow management. Reason being, if you see the production level of the Maruti for the month of October is around 1.8 lakhs car a month, which is the highest car production in the history of Maruti. So you can see, you can understand the challenge which we have faced, because after the COVID, what happened, around 50% of our manpower was not available. So we recruited the new manpowers. And when we recruit the new manpower, there is a big challenge as far as the quality part is concerned. The steel mills, they booked all their orders for the exports because they have not anticipate the such type of you can say the ramp up will be there. So from that point of view, we faced a lot of problem with tier 2 suppliers. The third problem we are facing regarding the cash flow management, because the banks are become very conservative in that particular period, because they are not seeing a good future as far as the automotive market is concerned. Those they hold all our working capital limits and everything. So all these challenges are there. So we make a CFT. We work very dedicatedly. We use the technology. We use our relationship with the bankers, and accordingly we manage the working capital, reduce our inventories. As far as we have started a lot of training programs for the newcomers, for the new workmen, with dojo training as the Japanese concept. So that's why we are able to supply to Maruti without any default 1.8 lakhs car a month in the month of October, or that we are able to achieve with zero defects. So that is, I can say, that is a challenge. That is we are able to we are able to achieve our target whatever the Maruti has set with us, because the Maruti is very particular as far as the quality is concerned, or as far as the supply is concerned. Because if suppose one vendor is not able to supply a single part, their whole total line of a Maruti's car manufacturing is held up. So we are in tremendous pressure, but thank God, with the help of the technology and the workmen and the management and the bankers and outside all the world, we are able to achieve it. So thank you very much, especially Inflection, for choosing us for this award. Thank you very much.
Congrats, Vinod. This is a big award because the top CFOs like you have juried this. Not easy to get this one. Congratulations again, and have a glory on this.
Thank you very much.
Thanks, Vinod. Many congratulations to you.
Thanks a lot.
And the last award for Procurement Leader of the Year, Financial Services 2020, goes to Vijay Rawat from Airtel Payments Bank, and I would request him to share his thoughts on this.
Thank you, Ramrita. I'd like to start by thanking the jury and Alden Global for providing this platform for us, especially in these times. This award is special to me. I have been with the Airtel Payments Bank for the last 5 years. I've built up the team, built up the policies, done a lot of, I mean, even I was part of this core committee which set up the bank. Initially, it was a wallet, Airtel Commerce Service Limited. 4 years back, we got the banking license and we launched the bank. I joined the bank 5 years back. So Airtel Bank has been special to me. Driving procurement in a startup kind of culture and especially in a bank was difficult from the perspective the procurement was always dependent upon finance, and we have to work in accordance to the finance policies. I'll say, in my previous organization, I've seen that finance and procurement, supply chain, they go hand in hand, but banks are different. FASTag was the first physical product for the bank, and in fact, I'll say the first physical product for first payment bank, which happens to be Airtel. There were shortage of FASTag because government has mandated FASTag last year out for all the new vehicles. In fact, they have mandated FASTag for old vehicles also from 1st of January. I'm sure all of you would be getting such notification. There's severe shortage of IC chips. The team have to run from post to pillar, have to go to different manufacturing hubs and see what quantity of FASTags which we could get. all those things done and said, we Airtel Payments Bank is and is constantly ranked number 2 or 3 on daily basis in sales of FASTag across the India. So that's kind of achievement for the procurement team. In fact, this project has helped the company realize the importance of procurement. So thank you very much.
Congrats, Vijay. You have been pioneer in this. Looks like, and great show. I think you have been making all the tolls run because of the FASTag you have been providing. Big show, Vijay. Congratulations again.
Thank you, everyone. Thank you, Sandeep.
Thank you, Vijay. Many congratulations to you. Thank you to all the leaders for adding the value to this forum and the delegates for making this rich discussion. Hope you all will be able to carry the thoughts of the day to build robust roadmap for the COVID-19 and beyond. See you in our last mile delivery conference on 23rd December and Martech and Pharma Vaccine Logistics in January. Thanks to the leaders and attendees for your valuable time during the day. Have a great evening. Thank you.
Thank you.
How I'm looking?